All right, good morning, my lovely people. Good morning, good morning. Shit, I did not pull the stream up to make sure I have sound. It's all good. How you doing today? Hope all is well. I'm Justin. This is the Ivy League live stream. We're going to go through right now, talk about what's going on in the markets. We're going to get our levels, get our game plan, and we are going to do things like not miss the NVIDIA pullback and or long like we talked about yesterday. Do me a favor. Hit the like button. Subscribe if you haven't already subscribed. We get to 1,000 subscribers. If I still do this live stream during the market hours, I am very close, probably this week, to ending up. I may stream here, but all of the plays, questions, and all that stuff will be on Discord. We'll get to that. Again, listen, it's just really tough with, it's a saturated market, but people really, don't really know that we're here or what we offer. So if you could, let a friend know. Sorry, I was pulling up stream. But anyway, hit the like button, subscribe, tell a friend. We're just here to help you guys make some money. And the reason I created this was to be able to get traders alike together, work together, and be able to make some money together. Because it can be done. You guys see me do it every day. And with that said, contributions, donations, if you want to work with me, all that stuff, the link is in the description. It's appreciated. By doing so, you can help keep this free. This might be the last week. I can almost tell you that this probably is the last week. So, but we'll talk about that more as we go. So I hope you're doing well this morning. Let's talk about what we have today. You have Tesla delivery numbers that are going to be coming out here. I think at 9 a.m. Don't quote me. Stocks down 1.6% after the EV maker. June sales of China-made electric vehicles fell 24.2% from a year earlier. Data from China Passenger Car Association showed on Tuesday. Hold up. So Tesla stock fell 1.6% after the EV manufacturer's June sales of China made electric vehicles. That doesn't even make any sense. I'm just going to skip that. All right. So I don't know. I guess it fell 24%. I don't know. I guess from all the electric companies, from the way that sounds, I think there's like a mistake going on there. That doesn't make any, like, if I read this back to you, does this make sense? After the EV manufacturers June sales of China made electric vehicles fell 24%. 24%. So I guess just Tesla's vehicles, their sales were down 24% in China. But Paramount stock rose 3.1%. New York Times reported that the billionaire Barry Diller is considering a bid to take over the company. You're going to see a lot more of this with the possibility of Trump coming in, right? Regulation, common sense regulation, not government stepping on your throat and large and small businesses' throats. So you're going to see a lot of this in hopes that he can get voted and, business can happen. I say it all the time here. I'm not going to do it right now, but the government does a lot of things that they tell businesses that they can't do. So, and in the same sentence, they talk about fair. So it's a load of shit. So you're going to see stuff with that. So Paramount's up. We're going to look into that. Boeing stock fell 0.4% after Associated Press reported the U.S. Justice Department is waiting for a plane maker to accept a plea deal to settle the felony fraud charges related to two fatal crashes of its 737 MAX planes. Now, I don't know where these crashes were, but again, I will reiterate that there's a big difference. There's a stark difference between the United States and really anywhere else. I'm not going to, more so Middle East, some of those third world countries where they may lack the training or doing some of the protocols that they should be doing that they don't do. I'm not going to, I'm going to say that they all have respect because humans aren't supposed to be 20, 60,000 feet in the air. But, you know, I don't even remember a time when we've had a plane crash here in years, honestly. And you got to give it up because they are doing what they're supposed to be doing. So, but yes, the door coming out of the plane, that's no excuses for that. Carnival, Norwegian Cruise Line. So cruise lines are going to be on tap today. Stock fell 1.1%. CCL fell 1.1%. Norwegian Cruise Line dropped 1.2% as well as Hurricane Beryl worked its way through the Caribbean, potentially disrupting cruise activity. Polestar, PSNY, stock fell 5% after the EV maker posted a first quarter operating loss, adding to it that they will have to take steps to offset hefty EU and the US support tariffs on its Chinese-made electric vehicles. What you're not going to see here, by the way, and I'll keep going with this, is Novo Nordisk, okay, which I'll get into. You guys can see here that Novo Nordisk is pulling back right now, and it's bounced back a little bit. We're going to get into this. This has to do with, you probably already know. So CrowdStrike stock slipped 2.5% after Piper Sandler downgraded its stance on cybersecurity firm to neutral from overweight, or to neutral from overweight, citing valuation concerns, saying risk to reward is less favorable, and I agree. Insight fell 3.1% after BMO Capital Markets downgraded the pharmaceutical group to underperform from market perform. Downgraded. Okay, citing concerns that revenues from its key Zima cream, I don't even know how to, Upsilura would likely be challenged. All right. So these are just a few that we'll go over and talk about. So, sorry for my little girl, but my cat, she's going to be a little locked out today. All right, so that's just a little bit of what's going on. So we got EV makers we can talk about or look into. And you also had some news here with American Airlines, and we were talking about airlines. We traded airlines last week. There was news with American Airlines here that there was news. They don't have it on here, probably because it came out before. Let me see if I have it over here. SEC to, I swear. Okay. Let's see here. So let's go over to the markets again. Novo Nordisk. Biden urges Novo Nordisk to cut Ozempic and Wegovy prices. Like this is that shit that we talk about where they randomly go off and say stuff like they demonize the capitalism, right? They demonize making a product and getting sales with that product. It's always lower your prices. It's always lower your prices. How about you tell the people and encourage the people to make more money? How about that? All right, stop tacking on regulations. Stop making it harder for people to succeed, and maybe they would be okay. And the majority of this, here's why Novo Nordisk, this is how dumb Biden is because Novo Nordisk actually gets by, has a legal route through insurance that the others do not. So he probably doesn't know that, but you can actually claim this on your insurance. All right. So now you're starting to get talks of the Biden administration. So you could look for if you do see any more downside, I would look for pops into, yesterday's low, that 143, 144 area, and you might be able to get this thing back down to 140. I would look for 140 on Novo Nordisk, okay? All right, let's keep going. Let's go to the SPY. Let's start with the S&Ps. So we had a pretty much inside day yesterday. We didn't really move much. It felt like there was opportunity early on, and I said this if you were with us on the live stream, that I felt like the move that had came and went by like 10:30. If you were not on that, that's it. It was like you had to have called it, and that was going to be it. Just because it's 4th of July week, a lot of people on vacation, and that's just it came true. That was just what I felt, and it's pretty much what happened. So we watched NVIDIA yesterday. I was watching NVIDIA for the downside, and then the reversal off of the low there, which we'll get into. Just pulling up scanners real quick so I can. So we have support down here at 543. Yeah, 543. All right. 20-day moving average is coming in here. It's working its way up slowly but surely. Same thing, just a nice long consolidation. What I would look for today, now that we've gotten under this level, I would start looking to see if we can turn this into resistance. All right, what I'll do is I'll throw this up on TradingView. And we need to look at Bitcoin because it's still climbing. And we talked about Coinbase yesterday, but the SPY. So these people are so stupid. I cannot stand these lies. They keep talking about Trump and putting their personal opinion on the fact that there's only going to be tariffs if these companies that are from the United States don't. It just, I forget what he said. He said something about it's only if companies won't work with us. If they, because I guess apparently they're tariffing. There's already tariffs on all of our products, and if there's no way we can meet in the middle, then those companies or countries are going to have tariffs. So I would watch the interview with Chamath and them because everybody keeps talking about this, but they really just they have not heard exactly what he was talking about. So anyway, 543, guys. I've watched that 543 level. It's still support until we break it and turn it into resistance. You could look for 544. And that's what I may look for today. I may look for 544 to become resistance. If we can get that on the S&Ps, 544. Let me do this. Yeah, 544. Let's see if we can start making this, because you can see our resistance is up here, and you can see it's slowly going lower. I'm going to look for 544, guys. All right, 544. And see if we can't get an extension down here to the 20-day moving average. You should expect some buying at the 20-day moving average. You have Powell today as well. Remember that. You have Powell. Just logging in real quick. Give me 1 second. All right, so let's go over here. I wanted to yesterday go through and clean my charts up, and I was not able to. I did not have a chance to do that. Yes, 544. 545. Let's see here. You know what? Where are we at? 3 people? Not even. How many people do we have here? Let me know in the chat. Do you guys have any tickers you guys want to look at? Or if there's even anybody here. Because I'm not going to waste my time. Let's see here. So we have a couple people here. All right. If you guys have tickers you guys want to cover. I mean, the overall markets really haven't changed. The only ones I would look at. I was just logging into my broker real quick. Is the... Here's what I'm watching. I'm just going to show you guys so you guys can see it. Is this area over here, right? For the S&Ps and the Qs, you know, you should expect some downside here off of 480 on the QQQ. Possibly, you know, we are consolidating in these consolidations. And I told you guys, I think last week, that you could watch out for a consolidation. Is that... You know, I don't know what Powell's going to say. What time does he come on? 9:30, I think. So Powell is at 9:30, right at the bell. I gotta hurry up. Look for if we start close. See, we already tested it. No, we did not test it yesterday. All right, we did not test it yesterday. Just give me 1 second. He is right. He is right about that. All right, so we already made this pre-market. So 482 on the Qs. Watch yesterday. What I'm going to say is watch yesterday's close. Watch yesterday's close. If we can start closing up here, this 482 level, look for 482 because then you're going to have this open space up there with not much trading activity. So, you know, I just kind of want to move on. The overall markets really haven't done anything, so I'm just going to be watching 480, 482. And if we end up dropping, like I showed you here, I'm watching this area here to the left. Look to the left of the monitor, and pretty much right there. You see that flat top resistance? Right? This flat top resistance right here, and then look, we're just sitting on it. So if we break, then, and you know, depending on if we have a reason, I would say the reason I'm going to do 540 is because you're going to have the 20-day moving average coming up, which should be around there. So you may not get 439, 440, right? You may not get all the way down there unless Powell sends us there. All right. So this is the range that I'm just waiting to get into. But if, you know, it's just this level continues to hold on the SPY. 543. Top side of that is 546. Underneath of that, I would look for the 20-day. Not necessarily a level, but like 541, 540 to the downside. It's pretty easy, right? It's pretty easy. Let's keep moving it. Let's go here. I don't know why that's changed. Okay, so that is the hourly. Let's go to a 15-minute chart. And you guys can see here that same thing, right? Flat top resistance right there. 478. 478. Bottom side of that's 474. But you got to watch for the 20-day moving average on the Qs, okay? So if that makes life a lot easier, that's what I'm looking for. All right, flat top resistance. That previous resistance has been support. We're holding. Look for the 20-day moving average. I haven't had a chance, and again, I do apologize because I haven't had a chance to fix to get rid of all these levels that I have here. All right. is this? So this is 478. 470. Yeah, 478. I could just do it now. This needs to be a 2. I don't know why I have these right next to each other. I don't understand that. I mean, you can see it here, but starting to not like this action. Like, seriously, I'm starting to not like it. Like, it's just sloppy. You have all these little ass like moves up and down, like you go up and down to go up, and then while you're going down, you're going up and down, right? Like, this is the most chop I have seen, and it's been some time since we've had chop like this. Like, look at this. It's just eating premium. It's not even moving. We're just literally moving sideways. So until the market shows us that it's going to give us some direction, I'm not going to look for something that's not there. All right, until the market shows me that it's going to give us some directional movement. 480 on the Qs, 482 top side. If we can close above 482, I would like to look for a run back up to 484. All right, that is the QQQ. Let's go into the charts. Let's do it. All right, so let's talk about NVIDIA. We talked about NVIDIA yesterday. Let me see here. I really got to get this stuff cleaned up. I do. Got to get these charts cleaned up. All right, so we are still, yesterday we were underneath that 20-day moving average, and we had a really nice reversal here. All right, so you can see we have this little bear flag. We break down. This could possibly be a failed breakdown, and we are underneath. We closed underneath the 20-day moving average. So I'm going to be watching if we can close and hold above 125. 125 is going to be that level. All right, we still are underneath of it. You come in with the gap down today. I think people are giving this a little more, how do I say it? People are giving NVIDIA, they're getting a little comfortable, right? I think, listen, I think it should go higher, all right? I think it should go higher. But the fact is, a stock that should go higher, I think in order for us to go higher, we need to test 182. All right, we need to test 182, and we also need to talk about how even if we go higher, look what's waiting for us. Right? Look what's waiting for us there. So look at all this selling. Look at all that sell side volume. Bang! They stepped in right here the minute you got up there. Last week we traded it off of 126, just dying to get to 128, 127.50, and it was a struggle just to do that. It was a struggle just to get to 127.50. Because we know that 126, holding 124, rallying to 126, what's at 126 and 127 in the 127s? We know what's there. Now the question is, have they sold enough what they wanted to sell? Do they step aside, step back in up here? Do they let a low volume bull rally step in? Possibly. So I'm just going to be cautious. We are still underneath the 20-day moving average. We're still underneath of it. We consolidated on it last week. You consolidated on it. Nice consolidation here at 123, 122.97. And now you're turning that 20-day into resistance. Because that 20-day was down here. Remember that. The 20-day was down here. Now that we consolidate, it lifts the 20-day up to the price action that we're at, the longer we consolidate. So right now, this week, it's resistance. So This morning there was a really nice setup here on NVIDIA, and it ended up not falling through, but this is the level you would watch for, right? 123, 122.97, and look for pops into that 20-day moving average. You got to get through 125. You got to get through 125, and I think a key signal there might be the 124. There's a reason why we have 124 on our watch list. All right, 124 starts to hold. We're able to use 124 as a, you know, as okay. We're starting. We're holding support and making progress higher. So 125. Let me pull this down. Let me get this. I know this is a pain in the ass. Trust me. I know. All right. I would like to be able to get above 125. I would love to be able to do that. We got to start holding this 123 for support, man. We have to. All right, so you guys can see here. Look for I would look for 123, pullbacks into 123, which is where we're at right now. We're hanging out right here at that dotted line, at that support level. So watch 123 for support and see if we can crack above yesterday's close.
And delivered 13,790 for the quarter ending June 30th.
So,
our company reaffirms its guidance for annual production of 57,000 total vehicles, ticker RIVN.
Okay, so there was just news out there on Rivian. All right. Okay, so when we open up today, and I tell you guys this, let me see here. I'm just going to... Alright, there isn't anybody here, so what the fuck am I doing? Alright. Y'all out of luck. Alright. Unless you guys have questions, just throw them down below. And we will...
Douglas Element, ticker DOUG, announces the closing of a $50 million investment from Kennedy Lewis Investment Management. The shares popping, ticker DOUG.
President Biden and Senator Bernie Sanders are calling on drug maker Novo Nordisk to cut prices for its Ozempic and Wegovy weight loss drugs. That call comes in an editorial published today in USA Today. The editorial focuses on overall drug prices, and the president and Sanders say that there's no political or no rational reason why Americans should pay the highest prices in the world. The comments right now...
There's no reason why Americans should pay the highest prices in the world. Yet they say that, but yet they're okay with charging the most tax in the world. Wait, what? But it's okay for businesses to do that? Fucking retards. All right, So again, I know we did this yesterday, but we'll do it again. There's a nice little level here, 122, but I think you got to watch 123. It's just reluctant. You guys see how this thing is not holding above it? You see how it does not want to hold above it? So be careful. That's all I'll say. Be careful. Let me see. Just trying to look at the scanners and like I'm doing a lot right now. We are holding up, but we're reluctant to make any moves here. I want to try to get a move higher. I would look for, you could look for a move into the 20-day moving average on NVIDIA, but or look for the rejection up there. Unless we can break above it on low volume. All right. So you guys see this area down here? This is your support level. All right, your support level's down here at 118 to 120. 118, 120, that's your target. All right, 118, 120 is your target on NVIDIA. Look at that mean tail yesterday. Boom, boom. That's kind of a double bottom there. I mean, this, you could consider this a bear flag right there. All right, I know you could consider that a bear flag. Small one, it's just a wedge, but let's see if we can trend higher and see if we can get up to 127.50. Look for pullbacks. Where are we right now? We're at 122.94. Yesterday we closed at 124. So we closed yesterday at 124, and I was actually thinking about getting long NVIDIA. I was really reluctant to. You're coming in with a gap down now, so I would look for a pop into yesterday's close and see if you get some more downside on this name. All right, I think you get some downside that's buyable. Dude, I'm just struggling here, guys. I'm just struggling. All right. You still have some room down here at 121, but I'm not going to spend all day on this thing. Keep an eye on this level right here. Keep an eye on 122. There's some nice sell side volume yesterday too. Yep, let's look for some downside, targeting 120, 118 on NVIDIA. We'll look for a rejection there at 123, 122. Or if we can sit here and hold, look for a climb and a blast up higher through the 20-day. Pretty self-explanatory there. I am moving on right now, guys. Just give me 1 second. Just trying to. This is sort of a range of where things are now. Of course, you got in a lot earlier, but I'm curious your reaction to that.
Listen, I think I said this last time I was on your show. I think we were going to be in a 55, 73 range until we got some takes a while for things to digest. It was a huge move up, but until the government actually stops spending like drunken sailors,
So yesterday Tesla broke above his 200-day moving average.
he grew government spending just as wildly as Joe Biden. I mean, these have been
I gotta get these charts. All right. So Tesla broke through the 200-day moving average yesterday. Look for pullbacks into it, and I'd be watching 205. Watch 205. Let's go actually check in and see where she's at pre-market. So she's at the 200-day right now. This could be the pullback that we needed to go long. It's been a nice run so far. You're still getting that increase in volume. So what I'm going to look for is a pullback and attempt to go long back to yesterday's high. Let's see here. What is this? 205. So Tesla 205. Let me do this. Yes, 205. We can look for 205.
Yeah, listen, it's a scary time for the world, right? I mean, we literally lost the center in France. We're losing the center everywhere. I think the COVID response was so powerful, and it created this.
I really got to get rid of all those levels. I have so many levels that I have to get rid of. It's just borderline insane. I'm just struggling this morning. Alright, so we are a bit overextended, which is okay. I want to see if we can start to I still think I get worried that this is just going to consolidate, and I do want to buy the consolidation. I do. So if we go to a daily chart, you know what? I'll work on it later on because I've already put all these levels there. This is a major level here on Tesla at call it 210, 209.50. It's a major level, and you closed there yesterday. Chances are we could look for a pullback, but the fact that we're above the 200-day, I think that holds. I do. I think the 200-day holds, and maybe you look for another run back to 210. And you have to ask yourself if it's worth it. Is it worth it? Or you look for the break of the 200-day, and you look for the rejection off of it. You look to get short at it or long at it. And I think that bounce back actually gets taken back. I think when we bounce back, you can get a short there. I do. If that's off of 210 level, look for a short off of 210 on Tesla. All right. So if you're able to catch a bounce, look for 210 and see if that takes you back down to 200. That'd be a nice trade. That would be a really nice trade. So you should start to get a bounce back soon. Should look for a bounce back soon. This is again 211, 210 is what I would look for. Let's see. Yeah, 210. Prior day's close. Prior day's VWAP. I would look for a pop up there. And that's what I would do. God dang, that's so bad, guys. I gotta get rid of these levels on Tesla. Seriously.
coming up. How much did that?
Is Mike on a boat or an airplane?
I'm not. You never know with him.
He's moving around a lot.
Yeah, there was a lot. There was a lot of moving.
It could be if you're just on a desk. Sometime if you're on a desk.
Could have been on like an earthquake, or he could have been on a great big freaking yacht. If he wanted to. How much did for him? Yeah. How much did that huge auto dealership pass skew?
See, 14. Damn, we're at 14.
Talk about what the industry needs to better protect itself before.
So I'm looking at Rivian here.
Stay tuned. You're watching Squawk Box on CNBC.
All you have to do is just look into his eyes, and you know he's got it. The focus, the passion, the fearlessness, it's all right there, staring back at you.
Just not focused this morning. I don't know why. I really don't, man. I don't know why. I'm struggling this morning to stay focused.
So when you find your call, nothing can stop you from answering.
Lung cancer is the leading cause of cancer-related deaths. Now Bioaffinity, a NASDAQ company, is commercializing CyPath Lung, a groundbreaking, non-invasive early detection lung cancer test, addressing a market projected to reach
Alright, so you guys can see here Rivian
Bioaffinity's
200-day moving average coming into
has the potential to dramatically
play.
rate of lung cancer patients. Bioaffinity, stock symbol BIAF on the NASDAQ.
The windows come down, the shoes go off, sleeves go up. Coast is there with open arms. Leave it all behind and settle in. Get 'em along.
At Avocado, how you sleep matters. Whether you crave indulgent luxury, a naturally cool night's sleep, ergonomic back support, or all of the above, sleep is never a one-size-fits-all at Avocado. And because your health and our planet is what matters most to us, Avocado's certified organic mattresses are made with natural and renewable materials. Discover why Avocado is one of the highest-rated mattresses in America. Visit our stores or your local retailer or shop online at avocadomattress.com.
20 seconds a week to lose 20% of your weight in a year with diet and exercise. That's the power of GLP-1s through Row. Connect with the provider today at row.co/coach.
Hello, I'm Ethereum. Hello, big finance. You look really tired. Just calling it a day. But it's 4 p.m.
Yeah, and I've been working nonstop since 9:30 this morning, so
9:30.
That is a nice level right there. 382 long crowd strike.
Billions around the world. Well, actually, I do.
Even though there's not many that are going to be watching this, this could be a nice little level there to get a bounce back on CrowdStrike. This could be a really nice trade here. Because whether they downgrade it or not, whether there's a valuation, it doesn't matter. There is still a group of people that are going to be buying this.
As this band receives additional $25 million from Artivian for Nexus FDA approval path, that's Alpha Oscar Romeo Tango AORT.
The Olympics from Paris starts July 26th on NBC and Peacock.
Some big stories.
Let's go into Coinbase. Let's go into Bitcoin. And let's see if we have... Yo, I'm struggling so bad today. Let's see if we can bounce into 64. See if we can get a nice bounce into 64,000. So nothing's really changed.
CORZ, Core Scientific,
Man, we've technically already hit it.
Ladenburg,
We gotta bounce.
buy rating at $14.50 price target.
I have not looked at the daily chart in a little bit. So this is a nice double bottom. Let's see if we can get a pullback. Is that a tail from yesterday? Doesn't look like there's a tail. What I would like to see is like a pullback. Like even if it's like a low volume red day and like test this 61.5. Just like you rallied out of it, pull it back, and then try to get back up there to 64. And get through it, 64, 65. So I just worry the longer it stays here, that 50-day is going to start curling down, and then that's could be used as a point of a rejection. So be careful. So let's look for. Let's see. This is a nice little double bottom there at 16 or 62.4. Nice double bottom there at 62.4 right here. You guys can see pivot highs 1, 2, 3, 4. Pull it back, pull it back. You are making lower highs now, lower lows. The volume was pretty nice here, so watch for buyers down here at 61.7. And that is Bitcoin. So with that said, we can look at names like Coinbase. We traded this yesterday. So if you guys notice, from the low to the high, where are we right now? We're stuck between both anchored VWAPs, which is 215. The area, I'm sorry, I should say, is like 210 and 215, 220, 235, 230. All right, we're just stuck between these ranges here. Looks like we're going to make progress today, though. Let's look for, man, that sucks because that's an hourly chart. I would say look for like a low volume pullback into this 50-day, but I don't think it's worried about the 50-day. Like, it's not worrying about it at all. And I think you're just in a consolidation. So if I go here, let's do that. Let's go ahead and look for, it's just my thoughts, but let's look for a bounce off of 230. 230 entry to 240. 230 long to 240. All right, 230, which is, oh, you're making, uh-oh, hold on. You're starting to try to make this resistance now. No, you're holding it. You're holding 230. You already went to 235. Well, it's either a rejection at 235 and go short and get that entry back down into 220. That could be an option. 235 short. 235 short down into 220 again. And we hit that yesterday. 235.
Well, this system, it affects about 50% of the dealers here in the U.S. And I saw a piece of data the other day that said the software that goes through CDK here in the U.S. represents about 2.6% of the GDP. So, as you know, the auto industry has a big impact on the GDP, but this system is the heart of these dealerships. It allows them to make their sales, track their service.
All right, so you guys see here, CrowdStrike, it's consolidating nicely. You know, that's my opinion here, is to see if you can take a long off of 382. If it's able to hold here. 382.50 longs. Up into prior day's close. What's that? What name's that? Coinbase. You know, right now I'm just struggling this morning. I don't know why. It's just one of those mornings for me, I guess. Is that what you're referring to as Coinbase? I have to clean my charts, and I was doing some stuff work yesterday, and like I wanted to go clean, like I just wanted to erase everything, and I wasn't able to do that. It was just late. Alright, so 226. So we're stuck here. We're stuck here. This is exactly why you gotta look at everything. It's exactly why you look at everything. You're just stuck. You're going to be stuck between this 20-day and 50-day moving average. You have three major moving averages. You have three major moving averages here. So watch 235. Watch for rejections up there. 235, 240. Really, I would just watch that 20-day, which is right there at 235. And let's see. Yeah. Final answer. Oh shit, look at this. I don't really like it. I don't really like that, so I'm not going to point that out. This could be a rejection point up here. So if you get a pop, so, you know, maybe you play this two different ways, but, you know, I would imagine within the next half hour or so, if we can continue. It feels like the Coinbase right now is going to try to pull back. Feels like it's going to try to pull back a little bit, but then look for the pop, bang, short, and then maybe you get it back down to the 50-day. That's the thing. You're not just going to slice the 50-day. Watch Bitcoin. That's all I can, you know, that's all I would recommend is watch Bitcoin if you're going to, you know what I mean? So as of right now, you got a nice range here. Any pullbacks down into this area, you would go long. I would go long. And then any pops, look for rejections up there at those pops. I mean, there's plenty of, if you're not, and let me also add that if you're not, if you don't know what you're doing, it's probably not wise to trade Coinbase, because it's going to, you're going to have to give it enough room for the volatility that comes with it, and it can be a tough thing to trade here. I don't know what is wrong with me today. I really don't. I don't know if it's these charts are just hideous and there's so many. I have way too many lines up here. I think I made this red because I'm expecting a rejection, but we'll see. SMH. Let's go here. Let's go to SMH real quick. Let's go to the daily chart. So SMH regained the 20-day moving average. It's actually pulling back. I still think we could get a nice little long or so here. This could be a really nice trade here on SMH if you were to get a pullback. I don't know why this is doing this. Look for pullbacks into like 257. 257 to 255. I like 257. All right, AMD, you broke below the 50-day again. It hasn't been too worried about its moving averages, weirdly enough. It feels like if you're paying attention, you'll see that other than I have way too many freaking levels and lines here on my charts, but you'll notice that the days that NVIDIA like has a red day and closes red, you'll see that AMD's been closing green. So it's kind of like, are we seeing some of that profit being taken and just throwing a little bit of money into AMD just to own it? I think so. I am curious though, like this thing just isn't moving, so I'm not even going to make any guesses, but if you get a pop, see if that pop takes you back down to 150. I feel like this is an area. If you get back down to 150, you should really see some buyers. And you'll have the 200-day moving average there. You're underneath the 50-day. You're underneath the 100-day. The 50-day is below the 100-day, let alone. So, other than volume, this thing is just screaming bear. So, I don't know what's going on here.
Tesla in the second quarter, we produced about 411,000 vehicles and delivered about.
Here we go. I knew it. 200-day bounce. Nope. Let's see.
Model 3Y production of 385,576 units. 3Y deliveries of 422,405 units for a Tesla TSLA.
All right.
Tesla other models production of 24,255 units.
We'll also keep an eye, of course, on the bond market. We begin, though, with the world's central bankers. They are gathering at that ECB annual forum. It is in Portugal, as it was last year. Sarah Eisen will be moderating. It's a panel that has Jay Powell, Christine Lagarde, the governor of Brazil's national bank. Last year, I think it was Japan's national bank. This year,
I'll have to go back to that. Guys. All right. Production of 410,831 and deliveries of 443,956 for 24 Q2 of 2024. The growth deliveries is 15% quarter over quarter, negative 5% year over year. The Tesla fleet reaches 6.3 million cars. I mean, bro, they're just not doing as much. They're still selling a lot, like, and they have other things going with it. So that is that. Production, delivery, so everything is ramping up. Alright. So Tesla's going to be on the list today, and we're not going to be on it. God damn it, bro.
Tesla 214.98 at the high, up about $5 now.
Yeah, we know.
For TSLA.
Fuck. You gotta be kidding me, bro. You gotta be kidding me.
How do you extrapolate that inflation data based on kind of the actual activity of cutting? I mean, is there any way to draw a correlation there, or is it something still in wait and see?
I would be careful trying to trade Tesla today. I'm gonna be honest with you guys. I'm just gonna delete everything. I'm deleting everything. I'm just sick of this. I can't do it. I really can't do this. This shit is like really messing me up for what's going on. It really is. Alright, so let's look at the daily chart. What do we see here on Tesla? Alright, what do we see? What do you guys see? First thing we see, major level right here. Major level. Right here, right there. Let me do this.
Speaking of yields, of course,
Let's do this.
close eye on the 10-year, and that has moved up a little bit.
20 basis points.
20 basis
I hate those red lines.
You've been picking this up, Leslie, in your calls, but I have had people starting to talk for the first time in a real way about the election.
Yes.
Obviously, following the debate performance by President Biden and the growing belief that that has certainly made things easier, perhaps, for a Trump victory, and then looking at what that would look like in terms of potential for tariffs, significant trade restrictions, maybe even more tax cuts. Nobody really talking about
198.
in some ways, and so maybe that's playing out a bit in the bond market. Unclear, and perhaps that is one of the reasons why we're at least seeing the futures under some pressure. This after what was not a bad day yesterday.
No, that's exactly what I've been picking up on from the investor community as well, is this real focus on the presidential election following the debate
So you're at 218, 220 now, guys, on Tesla. So let me go to a weekly chart here. I mean, it looks like 220 is your level, honestly. I mean, really, hold on. So you have your weekly 200-day moving average, 238, 240. And that 200-day right there.
Announced publication of preclinical data and lead program GRI 0621 in American Journal of Respiratory and Critical Care Medicine. That's GRI, Gulf Romeo, India.
Yeah, 220.
HOLI, Hollisis announcing completion of regulatory review of merger transaction. That's Hotel Oscar Lima, India.
All right, so what I'm going to pay attention to on Tesla is this right here. All right, we have
TSLA Tesla,
dude.
1986 now.
You don't have to yell. All right, so 220.
Production and delivery.
All right, 220. You have a gap right here. There's a gap fill.
That is Tango Sandy Lima Alpha.
And that gap fill takes you, it looks like, to 227. And what I'm going to do is look for pullbacks into 220. See, I just don't like. I'm just gonna do 210. All right, that's the range that I'm gonna play, and I'm gonna look for resistance up here. If we get above 220, then I'm gonna look for that gap fill. You can see we're bumping into it right now. If you get up above here and start closing at 220, look for a run to 228. You're in the gap fill. All right. So let me make sure that that is exactly where the gap fill is. Pretty much is right there. Could look for 212 also, pullbacks in the 212, but that's what I'm going to do, guys. This is the range. Alright, I feel like this is the range. You could find a small little middle ground right here at 215. This is also possible. Keep an eye right now for the second year, or for the second half of the year, and the strength or weakness going into 2025 for Tesla. So you can put yourself on the right side of the trade. Alright, if things have changed. As of right now, things have changed. The momentum has changed. The momentum has shifted. Alright? Don't fight it. Don't fight it. You can. I just you know, I don't want to see you guys. I want to see you guys make some money. If you guys have any input or anything, throw it in the chat. Alright? That's why I started this. Damn, CNBC was really late on that.
And these are better than expected. Remember, the street was expecting about 436,000 vehicles delivered worldwide in the second quarter. Tesla delivering 443,956 vehicles in the second quarter. 95% of them, as it usually is.
Oh, look, it's breaking above it.
And so this is much better than was expected.
All right, I'm gonna look for. We get in this gap, guys. I'm gonna look for pullbacks in the 220. All right, 220, and I'm gonna look to bounce into 226.50.
Tesla 220.56 now.
This thing can and will keep going. The minute you think that it won't, pullbacks into 215. Why do I want to look for pullbacks into 215? It's really like 212. It's really like 212. Yeah, it's like 212. Damn it.
Electric vehicles. We're not talking hybrids, pure electric vehicles, so you can compare those with Tesla. They came in at 426,000 vehicles. So Tesla still remains number one worldwide. And there you see VW, GM, and Geely as well. And in terms of annual sales, I'll be curious what this
217.
of what analysts are expecting for the full year. Right now, it's come down to 1.82 million vehicles expected to be delivered this year by Tesla. For a point of reference, it was 1.81 million last year. So essentially flat. Do analysts now say, okay, maybe we're starting to see some momentum here. Maybe we raise the full year delivery estimate. Now as you take a look at shares of Tesla, a couple of important dates to keep in mind. July 23rd. After the bell, that's when we will get the Q2 results, and we'll see what kind of...
Okay, Rivian, you did not report good numbers, bro. Or you're not a part of this. So don't even try to act like you are, because you're not. Alright, let's go into names like DJT and stuff real quick. It's almost 9:30. We're coming into the market open here. You guys are going to have to just bear with me. I'm struggling. I don't have any, communication with anybody. If you guys have questions or anything you guys want to look at, throw it in the chat. If you guys have any comments on anything, if you guys want to donate and give back to the stream to keep it free, that link is in the description. This will probably be the last week. I'm not. It's not really worth it anymore to just sit here and do this for free. With the amount of views and just it's not worth it. It's not worth it. I'm not going to waste my time trying to help other people if they don't want to help themselves. So DJT, GameStop, and Chewy are all on watch for downside. So let me go into that really quickly. I was just getting those charts set up. So 5 minute. Let's see, 5 minute real quick. And look, NVIDIA's breaking down. I told you guys. Everybody was talking about, oh, there's a buy trigger. There's a buy trigger on NVIDIA. If it's such a buy, why did it break the 20-day? And why could it not get up off of its ass right here at 126, 127.50? You know how much of a struggle that was? You know how we know? Because we were there. We were trading it. All right, we were trading NVIDIA. So anybody that... I just seen it yesterday that there were some tweets and stuff about NVIDIA. Oh, buy trigger, buy trigger. That... I don't know where they got their education from or think they know what they're doing. I'm not saying that they don't, but... this is it. 122 on NVIDIA. And I mentioned it this morning. I don't like it too much for the upside, and I also don't like it too much for the downside. It's already really overdone. So the minute that market opens up, look for pops. All right, there you go. Tesla's above 220 right now. All right, so DJT pulling back. Okay, I got the SPY, Qs 5, 5, 5, 5, 5, and 5. All right. Oh, shit. All right, DJT. Yesterday, I almost took a short on DJT. I ended up not doing it. I ended up not trading anything because I missed NVIDIA. I would look for bounce backs into let's see, we're already down here. We're getting ready to have Powell, guys, too. So he may talk about, you know, being on the cusp of interest rate cuts. Like we're almost there. Oh, we want to see a little more data. No, you don't. You just higher for longer. Anyway, we have the 200-day moving average here with DJT. I would honestly, I'm not going to take a stance either way. I just want to see what happens when we get back down to the 200-day, because I reiterated that if we got to the 200-day moving average, that it would have been a buy. So you got down there Friday, bought. Yesterday, bought. Today, I think like it's getting weaker, and the fact that you're not, you know, getting above 34 and then going, you know, being able to get above 34 and extending into 36, you have to look for 34 as your rejection. So today, if we can get a bounce, I'm going to look for DJT rejection at yesterday's close. All right, yesterday's high, yesterday's close at that 34 area, and I would look to try to take that into 32.96. Man, this is the move I wanted. I wanted that, guys. Like, that's the trade, you know. There may be a no trade here for me. There might be a no trade for me. Just because it's got to make sense. It's got to be worth it. It's got to be worth it. So, maybe we could, if you guys want, maybe we could do a swing trade here. But look at the 200-day moving average. Look at it. What has it been? It has been an area of support. It has been an area of support. Alright. But we'll see here. That could change. That very well could change. So, you just, you know, you have to make a decision for yourself if you want to stay in this long term or not. And if you do, just give yourself time, like a good amount of time, and just get short. All right, but so that's DJT. I want something that's going to move. All right, CrowdStrike. All right, still holding up right here at 382.50, 382.50 longs on CrowdStrike. Why is this doing this? Alright, Tesla is above 220, guys. Tesla's finally above 220 here. I would look for that gap fill at 228. I would watch for 228 on Tesla. Maybe even get up to 240. That could be, you could get up there as well. That was a really long consolidation, guys. That's a really long consolidation. And every time you get those consolidations, that rally, hold, bang, you can just get this huge upside breakout. So you know what? I'm going to go for it. I'm going for it. I don't know about you guys, but I may end up going for it. So, for anybody that provides, you know, for anybody that provides a, whatchamacallit, I'll give you guys that notification personally when it comes out. So the link's in the description. This channel is not monetized, so if you want to help the channel out, down below, the link in the description. And personally give you, if you would like any one-on-ones with trading, personal entry points, you may be just a few seconds lagging. Yeah, I don't know. That's where I'm at today. So Tesla is on my list. Tesla is on my list. Tesla is going to be top dog for a little while. So you just have to worry about that IV. Now you have to worry about that IV now. And if you're going to trade options, you need to get your entry and timing and option selection correct. Right? Not only to maximize it, but to make yourself some money. Don't screw yourself. Because if you just randomly go long, you randomly go short, you know, you could be doing yourself more harm than good. So, man, this thing is just... So here's what I'm getting at. So if you look at Goldman Sachs, all right, this is what we did with Goldman Sachs. What is that? It's a nice pop. Consolidate, 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 consolidate. Wham! All right? Right? Look at that. Look at that nice, tight price action. And it, you know, there was some time there. Look at that. It's beaut. This is a really nice wedge there. It's a really nice wedge. You know, I don't know what the hell that is right there. There ain't nothing you can do to chart that out. But, and then look what was to follow. All-time highs.
FDA sends a warning letter to Ozempic.
Oh my God. The FDA sends a warning letter to Ozempic. This is why Biden and crew got to go. Guys, you see this? This is proving my point. All that shit that I talk, they're proving it my point. The thing is they don't even know that Ozempic or Novo Nordisk...
Ozempic.com introduces into interstate commerce unapproved and misbranded semaglutide drug products.
We don't know how close the Dilla deal is, but the Skydance deal got pretty close. Yes. Where then was the trigger to bring in some of these more bigger traditional media players that we've always wondered, oh, they'll wait to see what's happening, but
that's Ozempen.com, not Ozempic.com.
Discovery, despite what would be the presence of enormous potential cost synergies, billions of them, it's the antitrust concern. You're simply not going to be either. You're going to fight a year and a half, at which point you're going to watch.
Hold up. What is going on here? Recent.
So when you close the deal, the synergies that were available to you are no longer anywhere near what they were. And I think that's the case for our parent company as well. These are tough deals to
NVO.
if in fact we get a change in the administration.
But Warner's restricted for various reasons. It's not like they're soaring at the moment. They've got a lot of debt already themselves. For Comcast, our parent company,
It's so crazy.
Disney, Netflix, this is trying to drop a
I fucking hate these people. I really do. Alrighty, so I think I'm ready for the day. Hopefully, we'll see. We're about to find out, right? We are about to find out. Let's go to a 3-minute chart right here. Good luck today, everybody. If you guys have any questions, throw them down below. Comment, like, subscribe. You guys are also in a giveaway. If you have subscribed, liked the video, shared the video, you are in the entry for the giveaway. And it's going to be a good one. That is the 1,000 subscriber giveaway. Alright, let's have a day, guys. Girls, ladies, gents. Remember, you're going to have Powell, so be careful. Alright, be careful. You're going to have Powell. Look at that pre-market volume. Isn't that hilarious? Look at the pre-market volume. It's about as much as a low volume day on Tesla. That's so hilarious. OVO. Stand this way. Stand this way. Alright. NVIDIA. I'm looking for pops. Okay. I wrote this down. 122. Alright. I'm looking for pops. And I want to get a pop into... I'm not even going to... Let's see. Who's here? Is there anybody here? There ain't even nobody here. Oh man, yeah, this channel is not gonna be. I'm not gonna be on here for much longer, guys. It's not your guys' fault. I just, you know what I mean. Sometimes you just gotta be good at what you do, and I'm just not that. I'm just not that dude. All right, but if you want to make some money, I can give you guys my alerts and a lot of the trades that I'm gonna be taking. You know, I know a lot of people out here talk that shit, but you know, call them out. Call them out. I don't have a watch list. What is... Oh my gosh. Alright, good luck today, everyone. If you guys have any questions, post them below. Links in the description for donations, contributions, negotiations, interrogations, litigation, all legations. It's in the description. Good luck today. If you'd like to work with us or work with me, that link's also in the description. Let me make sure all this is up and running. Alright, so NVIDIA's pulling back. It's so funny. I literally said to myself yesterday, I was laughing at myself or laughing at all these, like if you go to Twitter, right? Go look at this. NVDA. NVIDIA. Right? Bullish hammer candle. Power hammer bar close all-time highs. Right? I don't want to pick on anybody, but look, like this. Like, watch this real quick. I think it was like Danielle or some other girl was talking about, they were talking about buy triggers. I don't know, man. That sucks. Oh well. Oh well. Either way, you know.
Just a few moments from now, you can see they're setting up over there. The ECB forum in central Portugal. If you've never been,
They were so bullish yesterday. Oh, it's a buy trigger. Strong upside reversal off the 21 EMA area. Follow through. I'm just like watching these people. I'm like, yo, none of you guys look fucking so fucking stupid. Like, and people don't even know it. They think they know. Look. You know, one way you could get a bounce, but I'm telling you guys, there is a ton of people ready to get rid of this, and this fucking goofball looking ass motherfucker. This looking ass mother. All right, let's do it. Let's have a great day today. Good luck. If you guys have any questions, post them down below. This fucking retard too, Dave. You're a fucking retard, bro. Just stop. Just like we told you to stop trying to talk about 40s, this, that, and the third. Just shut up and buy. You're a fucking retard who can't even bet. You can't even make money at sports betting. And for anybody that doesn't know, you finna find out this winter. All right, college football, college basketball. That's what we do. That's what I have been doing for years. They have too, but they bet every game, and like, that's cool. That's what they do for fun. That's cool. Not me. I'm here to get my money. I use that college money for Christmas. Use it for Christmas and a vacation. There you go. Pop on NVIDIA. Let's go right to Tesla. All right. What did we say? Pop to yesterday's close. Let's see. Fuck. Where's Tesla? Which one should we trade? Let's see. I don't have anything up, guys. I don't have anything up. Oh no, 122. Trying to reject.
S&P 500 down 16.36, Nasdaq down 74.44, Dow down 55.
Bro, come on!
After the open.
Weak sauce. There you go. You got above. You got back above 120. Awesome. Awesome. All right. So I might be in a few different positions today. I'm gonna tell you guys that right now. All right. I might be in a few different positions. Again, link down below. I'm gonna look to. I need to wait. I want to wait for a pullback on NVIDIA. Or not NVIDIA, but Tesla. But it looks like that's not going to happen. I just accidentally hit the fucking... I hit the mouse. Dude, please stop. Please fucking stop. This thing is already fucked. I don't want to cuss, but... Yeah, this shit's fucked. Every day. I already need a new desktop. I'm going to need to buy a new desktop. Why is there so many people at 125? That's insane. Again, so we said this morning pre-market. We want to look for a possible pullback long into... You have to watch that 123 level, guys. You got to watch that level. See if we can get a double bottom here. But if you do not, you want to look for that pullback. She's gonna be slick. Watch. She's gonna be slick. Alright. Yeah, right there. What is that, 122? I gotta put a level here at 122, because this is the level. If you guys go back, this could be an entry point, too. Look at this level here. You have this minor level here at 122. I'm gonna have to go to an hourly chart. I'm not gonna worry about that right now. But look, you see how you're getting a rejection point off here at 122. I would like to get another pullback and then try to go for the long. Might not happen here. Look, let's see. 121, 122. Let's go look. Okay, look, the SPY and the Q's just ripped. Is Powell live right now? Yes, they are live.
President Campos net bill. So we'll have to just open it up, President Lagarde, with you and ask, where are you in this process? Because you cut in June.
Please, Abby, not right now. You did it yesterday. You fucked me up yesterday. I'm not doing it today. Please. I love you too. Sorry, it's just my cat. Every day at 9:30, she just every day when the bell rings, she just... Oh, I'm sorry, baby. You're okay. It's okay. I'm sorry. Jesus fucking Christ, man. Every fucking goddamn fucking day. Come on. Sorry, guys. Every fucking day, y'all. Alright, there's NVIDIA. Still, once again, testing 122. DJT pulling into the 200-day moving average. Tesla, there's some news out with this Oppenheimer stuff.
It's on that basis and on the basis of what I'm happy to describe as,
QQQ holding up nicely, 480.
underlying data information that fuels those three legs that we decided to do a 25 basis points.
What I'm happy, the three-leg reaction function and all the underlying data and information that feeds those three legs that we decided to do a 25 basis points cuts. But in the same breath of air, I also said that it was not a linear process, that it was not a predetermined path that we were embarking upon, but a step that would be followed by further review of data, further understanding of where our three legs reaction function would be. So that's pretty much where we are, and I would simply maybe add that we are very advanced in that disinflationary path, and we are in that sort of slow recovery which came about during the first quarter and which we hope will persevere, but all of that is flawed with uncertainties and big question mark about the future.
Sounds like you're setting up the market for a pause now. Is that right?
I'm not setting up anything for anyone. I think that it's for everyone to really look under the skin of the economy and see where it's heading, and appreciating what our reaction function is and how we're likely to decide.
Chair Powell, you have also been on a journey and have been on hold since last July, have not cut rates like the ECB in June. Why not? What are you waiting for?
So let me say that sitting here last year, there was a lot we didn't know, and we didn't know that we were just about to embark on a period of 7 months of much lower inflation readings. We didn't realize that the second half of last year was going to be an extraordinary year from a growth standpoint, and also from the standpoint of the labor market. So things actually worked out in the second half of last year in a remarkable way. Then, as you know, in the first quarter of this year, we continue to have solid growth in the first half, actually, solid growth, and a labor market that's still strong, although we've seen a continued rebalancing in the labor market. And inflation, after pausing in the first quarter, now shows signs of resuming its disinflationary trend. So it's a little bit different journey. So where that leaves us is we've made quite a bit of progress in bringing inflation back down to our target. While the labor market has remained strong and growth has continued, we want that process to continue. I think the last reading and the one before it to in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. That's what we've said, and what we'd like to see is more data like what we've been seeing recently. We'd also like to see the labor market remain strong. We've said that if we saw the labor market
once again, I told you guys,
unexpectedly weakening, that is also something that could call for a reaction.
How much more confident do you want to be?
It's hard to go short, but it's hard to go long. Like, here we go. Let's see.
We got last week.
That's right. So we're actually on a 12-month basis. We're actually at 2.6, both headline and core for inflation, and that represents really significant progress. I think we peaked at 5.4% in core, and the same thing has happened in headline. We've gone from 7.1 to 2.6. So yes, we've made a lot of progress.
Here we go. Nice.
We just want to understand that the levels that we're seeing are a true reading on what is actually happening with underlying inflation. And as we were saying at the last part of last year, people were saying, you need to declare victory, this is over. And then we had a quarter of inflation which was well above 3%. So we want to be more confident, and frankly, because the U.S. economy is strong and the labor market is strong, we have the ability to take our time and get this right.
So strong the government has to borrow money.
So September?
To hire state workers.
I'm not going to be landing on any specific dates here today. Let me also say that we're well aware that if we go too soon, that we could undo the good work we've done in bringing down inflation, and if we go too late, we could unnecessarily undermine the recession, the recovery, and the expansion. And,
guys,
and
I'm
so
trying to get in
we're aware
NVIDIA.
that we have two-sided risks now, more so than we did a year ago. That's a big change. I'd say risks are coming much more into balance now.
President Campos, you have
that's
been
not good.
on a different journey because you've actually been
careful.
cutting rates for
Be
much of
careful
the
there,
last
unless it can
year
change.
and have recently paused. Why? What are you seeing in inflation data, and what are you going to do next?
Okay, so if you go back a little bit in the history of time, so Brazil was one of the first countries to hike rates. I think in part because we had a different call on the dynamics of inflation, both locally and globally. And I think that turned out to be correct. And then at some point in time, we started the easing cycle. And throughout this process of easing, we've seen that inflation has converged. We have some of the problems that are common to advanced economies and other Latin American countries, which is labor markets very strong. So there were 2 points of attention. One was labor market being that strong, would that at some point in time mean inflation in the service side? And even though we haven't seen that yet, what we try to do is to try to estimate what would be the components of labor in every service so that we can anticipate if that were to happen. We haven't seen it, but we think it's, there is somewhat of a correlation when you look at the margin. And so most recently we decided to pause. That had to do not only with the current numbers and with this suspicion that we had service inflation that could peak at some point in time, and also because food prices were going back up a little bit, and I also think that's not only happening in Brazil, it's going to happen in some other places too. But also has to do with a lot of noises that we had. So we decided to interrupt the cycle. More recently, we've had a sell-off in some of the emerging market countries. Brazil was more affected. But I think this has to do much more with noises that were created than the fundamentals. And the noises are related to 2 channels. One is the expectation on the path of fiscal policy, and the other one is expectation on the future of monetary policy. So when you had these 2 at the same time, I think it created uncertainty enough that for us, we needed to interrupt and see how we can fix that channel and how we can communicate better so that we can eliminate those noises. Because there is a big disconnection with the current data, both fiscal and inflation data, and the expectation. So what happened in Brazil is the expectation started to the anchor, even though the current data is coming as expected.
Right. So you're talking about the fall in the stock market and the real recently when you talk about the markets.
But for us, what matters is how this gets into our reaction function. So I'm talking about expected inflation, the long end of interest rate curve. So we had somewhat of a steepening of the interest rate curve. We had a devaluation of the currency. But for us, what matters is the expected inflation, both implied inflation from the markets and expected inflation from the surveys. Those have gone up.
Yeah, I mean, President Lagarde, you have described the path to 2% as bumpy. We got an inflation report in the Eurozone this morning, 2.5%, not too bad, but core was high and services are still above 4%. So what is keeping prices so sticky?
Well, first of all, we had, as you said, a number that was lower than last month. So we said it was bumpy, and it's proving heading in the right direction for the indicator that we use, which is HICP, to measure inflation and to set our target. So that's good, but we still believe that it's likely to be a bumpy road until the end of 2024. But we still have target at the end, in the second half of 2025, on the basis of our projections, and the baseline is unequivocal on that front. You are correct that services hasn't budged. So services is at 4.1, if I remember from the numbers that we got this morning. And obviously we are very attentive to the components and what is behind services. And the real issue is to understand whether those are, this is caused by sort of permanent changes, or whether it is also a factor of the lag effects of other components which are finding their way more slowly and gradually into services. And the jury is out as to exactly what it is. the truth of the matter is that we do have a service number that has gone slightly up in the recent months and which is now staying at this 4.1 percentage points. Now, obviously, we don't need to have services at 2% because manufacturing goods are below 2%, and at the end of the day, it's going to be a balance between goods and services, and it depends on the weight of those within the index. But we have to look really what is behind it, and what's behind it is a lot of wages. Services has a very high component of labor. Wages also suffer from the lag impact of the labor system that we have in Europe, where clearly bargaining agreements are negotiated not only on an annual basis in some countries, but sometimes on a triennial basis in other countries. So you have this catch-up effect. You know, for those people whose renegotiation took place early this year, they had not had a negotiation of wages in the last 3 years. In the meantime, of course, inflation went up and their real wages went down. So there is an element of catch-up. So we need to really unpack all that to get to the root causes of inflation behind services. So we'll continue to look at that. We need data. It applies to wages. It applies to profits, because we are seeing profit gradually declining compared to the height where they weren't at the end of 22. But we need to see those profits absorbing the wage cost increases to make sure that the second round effect is out of the window and services are also going to be on a declining path as well. But services is the difficult one.
I was just going to pose that Taylor Swift is touring Europe this summer, and there tends to be an inflationary effect in services. Am I right, Chair Powell? We saw it last year, didn't we?
It's not just Taylor Swift, you know, others have come as well. Larry Spring.
I don't know. I saw her at Wembley, and there was a lot of spending going on. No, but how do you look at the services, the stickiness of the services inflation, and how tied it is to wages, which have been rising?
You know, famously, services inflation is stickier, and famously, it's tied to wages. I would say, so look at the U.S. labor market. We've seen a pretty substantial move toward better balance than we had a couple of years ago when labor was in, you know, extreme shortage. So what you see now is an unemployment rate that's moving back up toward a more sustainable level. You see wage increases moving back down toward a sustainable level of wage increases, inflation, and productivity. And you see, you know, vacancies to unemployment ratio coming back to where it was pre-pandemic, and so many other measures I could mention. So that's what we're seeing. And so the labor market, wage increases are still a bit above where they would wind up in equilibrium, but nonetheless, you can see the labor market is you know, cooling off, appropriately so, and we're watching it very carefully. But it doesn't look like it doesn't look like it's heating up or presenting a big problem for inflation going forward. Indeed, it looks like it's doing just what you would want it to do, which is to cool off over time, not quickly, not suddenly, not steeply. It's kind of what we've been hoping to see and have been seeing. So, and you know, services generally they're such a mixed bag, particularly non-housing services are a mixed bag. Some of what you're seeing is catch-up inflation from inflationary pressures that happened earlier. You know, that's true with insurance. It's also true with housing services inflation, where you've got some pent-up rent increases that have to work their way off. It turns out it takes more than 1 year for that to happen. It takes several years. So we see all that in train, and you know, we don't see ourselves getting back to 2% inflation this year or next year, or maybe late next year, but in the year after. The main thing is we're making real progress.
Can you keep cutting President Lagarde if he keeps holding? Does it make it harder?
She's a Forex trader.
I'm going to give you the conventional response.
It does, yes.
Because that's the conventional question you ask me. We do take into account the spillover impact of whatever is decided by other esteemed colleagues. And obviously, my esteemed friend, Chair Powell, is one of those. So we take that into account, but we also determine, you know, our monetary policy on the basis of what we see in our economy, and we look at the data that we get, the impact that multiple factors have on our economies and its numbers.
Does it matter for you, President Campos, what the Fed does next?
Well, I think it matters to an extent, but I think there is one point that is worth mentioning, which is more recently we've seen a sell-off in some of the EM, and especially the EM that had more, there were like more the best cases for investment.
I was just being patient
and
there.
You see that this is being explained with local news, but when you have a lot of sell-offs in different markets and they're all explained by local news, you have to ask yourself if there is a more fundamental factor driving that. And I think there might be. It's difficult to make the case right now, but definitely what we see now is there is more risk premium in a lot of the emerging market countries. And it was very synchronized with the long end of the US curve, and that correlation broke. So we've seen the last couple of weeks that even though the 10-year yield is more or less stable, even actually going a little bit lower, we saw a bit of a sell-off in emerging market countries. And I think that has to do with the fact that as you go for longer with higher rates and much higher debt, you start extracting liquidity from the market, and eventually you are repricing that liquidity. It could just be a temporary adjustment in EM, or it could be the beginning of a more profound movement. We need to wait and see. But I think the correlation between the US Treasury and some of the EM has been broken in the last couple of weeks. And I think we should pay attention to that.
What about the fundamentals in emerging markets? Because the economies seem to do better during this hiking cycle than they have previously. Why do you think that is, and does it continue?
I think most EMs did a better job in terms of, or at least an equal job in terms of anticipating the process and starting the hiking process. Also in the fiscal
Dude, come
part,
on with the fucking clicks,
on average,
bro.
emerging market countries spent more or less 10% of GDP facing the pandemic. Advanced economies spend a little bit more than 20. So I think there is also this thing which didn't happen in the past, which is by and large emerging markets were able to deal with the pandemic spending less. And actually, when you look at the fiscal post-pandemic, emerging market continues. It's not the case of every country, but continues to do a little bit better. So I think that also change the dynamics. And one other thing is, I think, the independence of the central bank and the maturity that a lot of the central banks have gained in emerging markets proved to be very useful during this process of the pandemic.
I mean, all of your economies did better than expected with the interest rate hikes. Wouldn't you say, Chair Powell?
Yes, I think particularly, I mean, many forecasters had a recession in 2023, which not only turned out to be wrong in the case of the U.S., we had well in excess of 3% growth. So.
But you still see policy as restrictive?
Yes, we do.
How restrictive?
Well, so that's kind of an empirical question. So I guess I would say, if you look at, we do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings, and now a slight softening in unemployment.
What I tell you guys,
in the form of wages, you see demand coming down, not just the supply that we're getting, but also demand coming down. You also see the effects of high interest rates in the housing market and in some other interest rate sensitive things. So you see that, and I think, I do think that restrictive policy is working hand in hand with this broad supply side recovery we've had, where we've seen the unwinding of the shortages and bottlenecks from the pandemic. We've also seen a recovery in labor force participation among prime age individuals in the U.S., and then some immigration, which has also been a positive supply shock. So we've seen all those things work together to give us, really significant declines in inflation. At the same time, we've got a strong labor market and growth. This was it's a great outcome for the people that we serve, and it's one that we want to do everything we can to foster.
So why not just cut rates to protect it?
It's what I said earlier.
Is it a bigger risk? Sorry, I'll rephrase. Is it a bigger risk that you cut prematurely and inflation stays sticky, or that you wait too long and the economy loses more momentum?
That is the question, and so our answer to the question is we serve a dual mandate, right? And these two things are embodied in that mandate. The risk on the inflation side is that you move too quickly, inflation comes back, and we didn't really solve the problem.
Feels like
and then we have to go
another day
back
where
in,
you had to
and
be on
that would
that
be
move.
that would be
These
very
moves have been
disruptive
really,
to the
really
economy.
easy.
So the other risk is that we wait too long. We understand that, and the labor market softens too much. Perhaps we lose the expansion. You know, so needless to say, we don't want to do that either. So, but at the same time, so we've got to balance those two. And again, given the strength we see in the U.S. economy, we can approach that question carefully. But as I said earlier, though, you see, a year or so ago, we were talking about inflation, and our framework called for us to focus on the variable, the mandate that is further from its goal. That's not, they've come back much closer into balance. And a good way to see it is the beverage curve analysis that everybody talks about and looks at. We've come straight down the beverage curve, but you're really getting to that place relative to job openings and hiring rates where traditionally the beverage curve is flattened out, which would mean higher unemployment as a result of further declines in job openings. So you can't know that with precision, but it's very much understood by us that we have two-sided risks and we have to manage them.
What about the recovery in the Eurozone, President Lagarde? It's also been pretty resilient, especially on the unemployment front. How confident do you feel in sticking this soft landing?
Well, we reached a level of confidence back in June when we decided to actually cut rates by 25 basis points. But as I said in the opening remarks, it's not something that is taken for granted, that is a given, and we're going to re-examine each and every step of the way whether that confidence is actually continuously reinforced in order to continue on that path. And it's the remarks by Chair Powell made me really reinforce my point about data. Because we are navigating in this universe of one risk versus the other, but where data is so important. And data is so important because we proceed always with the burden of the lag of time, whether it's the impact of our policy decisions, whether it's the impact of wages, whether it's the sort of on-time data or not. All of that has to be taken into account and analyzed in detail so that we can feel really confident that we can go forward.
At the same time, there are also political risks. Certainly they're front and center. It was nice of all the authorities to make elections all happen this week, certainly in France and in England. President Lagarde, is there anything the ECB can do to shield the rest of the Eurozone from feeling any negative impact from a divided government in France or from whatever the result is of the French election in a negative way?
Thank you so much for your question.
It can't be a surprise.
Because I'm not going to comment on the political situation of any of the member states, particularly those that are facing elections at the moment. But, obviously, the European Central Bank has to do what it has to do. Our mandate is price stability. Price stability is obviously relying on financial stability, and we are attentive to that because this is part of our job, and we will continue to do so.
Does the rise in French bond yields look worrisome at all?
These are the things that we monitor. This is part of the job. It's it's not particularly at this point in time. We do that all the time, and we are very attentive.
You have fought hard for the central bank's independence in Brazil, and yet now you are the subject of many attacks from President Lula, and so I'm wondering how you're dealing with that.
Attacks from me?
No. No, President Campos.
There you go.
Attacks
Did you
from
guys
President
get
Lula.
122?
I think he called you an adversary and an enemy.
Yes, well, I think as a central banker, we have to get away from the political arena
even just
and try
getting your
to
loan off there at 122
go on
and taking a piece
with
off
the
up there.
technical job.
Come
and I
on
think
now.
what we did, I think, is a living proof that everything that was done was very technical. So during the elections in which Lula was elected, the incumbent president, in his last year of mandate, we increased rates in a cycle that went from 2% to 13.75%. That's the biggest increase in rates in an election year in the history of any emerging markets. So if that is not a proof that you are independent and you acted autonomously, it's difficult to find another example like that. So I think all this narrative that the central bank has been political, I think we have to get away from that and explain what we're doing. And I think what we're doing has been very technical.
That's
the
not
last
good,
decision
guys.
was unanimous, and we now have 4 members in the board that were chosen by the current president.
Higher for longer.
And I think what we need to separate it was what is the political narrative and what is the technical job that we need to do. And I think history will tell and time will tell that the job was done in the best we could do with the data that we had at hand, and that was in the most technical way, and it was done in a group of people that actually analyzed all the data and that worked very judiciously to be able to get to the conclusions that we did.
Chair Powell, do you have any advice for him? You've been through some attacks from
I have no advice. I will say, though, to put it in my words, you know, we've been given this great responsibility and great powers, and really important that we get it right. And we've been told to stay out of politics and just do your job, and that's what we do. We don't try to get involved in issues that are not our issues, and in particular, we're just focused on our goals and getting through that. And
Look
if we
at those
do that
bounce
and do it
backs off
well,
of
I will say in the
122
United States,
again.
there's very
Anybody
broad
doing it?
support
What's
for
up?
an independent Fed in both political parties on both sides of Capitol Hill and everywhere. I don't think that that's really in question, as long as we just are seen to be doing our job and staying on task at all times.
Can I say something?
Yes, please.
I think that there are countries where governors do exactly what Chair Powell said, and yet get blamed, criticized, and I think that for some it takes courage to do the job, in addition to being a good, excellent technical expert.
But I do wonder if you're concerned, because your term ends, President Campos, at the end of the year, and it doesn't seem like President Lula is going to reappoint you. So do you worry about the independence of the central bank?
So first, I was never up for reappointment, regardless of who won the elections, and I've said that from the very beginning. When I helped design the independence law, I actually tried not to have the reappointment possibility in the law. And for me, the reason was I didn't want that the president of the central bank, at any circumstance, would have any incentives to bend his knee in order to have any kind of re-election.
See if you get a reversal right here.
We need to make that very clear.
I know we're below VWAP.
Secondly,
let's see.
There is actually a risk premium down in the curve, and I think it has
like 121.98
been elevated in the last couple of weeks as to an uncertainty of what happens when the next leadership or the next team takes place. But this in Brazil is done very slowly, because the president can change 2 directors every year, and we have 8 directors plus the president. So right now we have 4 directors that were appointed by the current government. And the last monetary decision, was unanimous.
Look at that reversal.
So I think what we did in the last decision proved that the group is very cohesive in trying to find a technical solution for the country. So I understand there is a risk premium and there is always this uncertainty, but I think the group that we have, which is composed of 8 directors plus a governor, voted unanimously, understanding that that was the best for the country at that time. And so I understand that there is a risk premium, but I think with time that risk premium will tend to decrease.
There are concerns in the United States about Fed independence if President Trump gets elected. There have been reports that he's looking at that issue. Obviously, you've been subject of attacks before. What is your level of concern about that?
I am not focused on that at all, and that's not just a talking point. I really think that we just keep doing our jobs. I mean, the U.S. economy, we have 4% unemployment. It's growing at 2%. Inflation's at 2.6%. Let's keep that going. Let's do our jobs. History will judge. I think if we can keep things on that path, that's what I'm focused on. That's the only thing I'm focused on. And as I mentioned, I do think support for the Fed's independence is very high.
All right, I'm going to take some off up there.
Capitol Hill in both political parties, among the leaders and most of the following.
Took some off right there on that pop.
I worry about getting the job right. That's what I worry about.
I know you guys don't want to touch politics, but President Lagarde, it does bring into focus the fiscal policies, right? We heard President Campos say it. There are concerns about the deficits in France. defense, if the far right should win, there are concerns in the United States about the deficit. So
whoa.
I
Hold
do
up, look.
wonder
Oh, hold on,
if
hold
you have
on there.
something to say or
Hold
to
up.
warn on the
Guys,
fiscal front as it relates
I'm
to
out.
making your inflation.
I'm taking that off. Look.
Has been suspended and now completely replaced. So there is a
Your bid ask, there's something going on here. You just had the bids come in higher than, look, 130. Look at that. Look at the bid ask. I've seen this before. It's okay that like the position could go, but I don't want to get caught paying too much and trying to exit and paying too little. You have time and sales on your level 2 and orders are getting messed up here, or it's my computer. It happened with Tesla before. 124 calls. So 120, 122 bid, 124, 123, 125. Okay, that worried me. I saw a 132 and a 127 ask. I'm like, wait, hold up. This is the best ask. And I am all the way up.
So we're not so worried about fiscal expectations as Roberto was saying.
Yeah, that's a good. I still like this level, man. Scalp off of that level. 122.98 until you break it. 121.98. 121.98. This level right here, guys. This is the level that I'm watching. Right here. Right there. Right there, 121.98. It's an area. And you want me to show you why? If you go back. Alright, I don't care if it's a 15-minute chart, 5-minute chart, whatever you want to use. I just want to make sure I can show it to you. Look at this level right here. Pivot high, pivot low. You come back down. Resistance. Look, resistance. Resistance. You break above it. Support. You dropped through it yesterday. You tried to make it resistance. You pull. Well, you just had like one minor pullback off of it. You break it. You turn it into support there on the 15-minute chart. You rallied. Then you broke it again today. You popped back above it. So you should make 122 support. If not, look for it to become resistance. Watch the volume. The volume is still low. We are still below VWAP. Man, I don't feel good. I don't feel good, guys. Just letting y'all know. Bro, I should have made a lot more money than that off of that trade than what I did. Alright, I should have made a lot more money off of that trade. I am still hesitant on the direction of NVIDIA. Man, that's crazy. So, once again, that was I don't want to get caught in something and get screwed. So you guys can see back here and even further to the left. I want to see if we can get NVIDIA higher. Can you take me higher? That's that little level right there. Flat top resistance. Of course, the mouse clicks as soon as air just touches it and screws it up. Come on, bro. So, keep an eye on this area here. Keep an eye on that area right there. That level is 122 to 121.50. It's a level. Watch 121.50 as well. Yeah, it looks like we might go down to Tesla a day, 121. But I don't know. I ain't worrying about it. I took my money. I like how you have all this volume to the downside or to the upside, but then you have no volume to the sell side. It's actually kind of funny. You gotta pay for the cost to be the boss. Look. Once again, look. 111, 108. Look, 108, 109. So something's going on with NVIDIA right now, guys. The bid ask is totally screwed up on NVIDIA. So be careful. Be careful. It happened with Tesla like 2 years ago during COVID. And I ended up trading it. I paid way too much to get in, and I got charged way too much to get out. Let me turn the goofball. Let me turn the show back on. That's all it is.
Stable trajectory of the debt in the next couple of years. And it's not one country or the other. It's something that we need to do collectively because the global debt is very high and it's going to start taking a lot of liquidity from the markets. And the ones
they don't want to hear that.
Are not the advanced economies, are the emerging economies, emerging market economies. And the low-income countries are feeling that effect already.
And you think the market is mispricing this risk?
I think the market was mispricing a little bit the fact that if you have higher rates for longer, the effect from extracting liquidity, depending on how much longer you're going to have these higher rates, I think the risk is higher than what the market's pricing is.
No ringing phones, just time to focus. Enjoy the silence.
Big trading partner
Also, the
for
China
you.
is doing. What is the
What's
focus?
going on there?
And what
How much
is the impact that this new policy will have for us? But because we export mainly food items and iron ore, we don't see that as a big threat. I think some other countries will have a different understanding of what this impact will be.
Yeah, I mean, there's also
right,
trade
so
barriers that are going up. President Lagarde, tariffs. I mean, in our election, we're talking about potentially more tariffs. Are you seeing that in terms of growth and inflationary impact?
Well, we're not seeing yet more tariffs than what had been decided back, 8 years ago, and which was consistently maintained later on in relation to certain products.
All right,
So
let's see if we can get a double bottom here on NVIDIA.
What is not stable at
There's
all
some serious
is
volume
the
there.
number of
So I
protective
told you guys
measures.
this morning I was hesitant on the long.
Occasionally, non-compliance with WTO rules, the level of disputes that are brought before the WTO, which is not in a position to resolve them because they are not equipped with the dispute resolution mechanism, and magistrates have not been appointed to that effect. We've had more than 3,000 trade protective measures decided in the last 2 years, and that is like 5 times what is the normal average of measures that are decided. So that's a concern, and it's a concern because trade has been fueling growth.
My computer's acting
and
so
because
slow,
Europe
man.
at large is not a small
acting
open
so
economy,
slow.
it's a large open economy, and trade restrictions are going to affect Europe much more so than other countries that operate without this degree of opening and vulnerability in a way. But the second reason I'm concerned about it is that typically trade is conducive to innovation. Innovation is necessary for productivity. And I think that the combination of reduced trade on growth and the impact of trade on the capacity to innovate and to improve productivity is a vulnerability for Europe, and one that we have to address very forcefully if we want to win this battle of productivity. So and it's not independent from inflation. I'm not getting away from my topic, but it's one that is clearly a concern on the horizon.
But and it could be inflationary. I mean, 10% across the board tariffs, Chair Powell.
Hold on, guys, I'm still
inflationary?
Here. If it says
Of course,
stream
I'm
ending,
not going to be scoring any potential political proposals which have been talked about. It's just not our job to do that. Also, almost anything affects the economy. Trade affects the economy, immigration, energy policy. Those are not our jobs. There are other agencies that do those jobs. We do maximum employment, price stability. So in our political economy, we stay out of that.
Right, but has implications for price stability, surely, and maximum employment.
Hey, Coinbase is up there and rejected that.
Again, we're not looking to be. This is
level.
exactly what we're not looking to do, which is to become players on issues like tariffs. I mean, because it affects, literally everything. All these things affect inflation and jobs. But notwithstanding that, there are others in the elected government who are responsible for trade policy. We don't comment. That's all.
Understood. So back to your job then. There is this debate and among the Fed and other central bankers about where policy rates are going. R-starred, the neutral rate, what that rate should look like, and whether it's different after COVID. What do you think?
Can we go back to trade?
Yeah,
No.
sure. Please.
So, R-star.
Look at that.
I guess
Look
I
at
would
Tesla.
start by saying that the thing that we write down as part of
Anybody
our summary
take
of
it?
economic projections,
The
and the
gap
thing
fill?
that economists mean by R-stars, is a longer run concept. It's the rate of interest that would hold the economy at equilibrium at a time when we're at stable prices and maximum employment, and there are no shocks hitting the economy. So this is not the economy today. So the first thing to say is that when we're sitting in the boardroom in Washington thinking about whether our policy rate is the appropriate rate for this economy right now, we're not battling over what long-run R-star is, because this is a different economy. This is an economy that's still recovering from the pandemic. And so many forces are pushing it this way and that way, and there's really not a lot of precedent, so it's a very challenging time. But it's not, the question, the R-star question is a really interesting question, and that is, are we going to go back to the very low levels of neutral rates that we had in the recovery of the global financial crisis? Or are we going to go part of the way back from today's high rates to that? And intuitively, most people think that we won't go back to those very, very low rates that we saw during the global financial crisis recovery period. But we don't really know. I mean, the neutral rate is moved around, we think, by slow-moving, longer-run forces, demographics, technology, productivity over time, all of those things move it around. Ultimately, the balance between savings and investment. So it's a great conversation to have. But honestly, when we're looking at policy in the boardroom, it's how is our policy affecting today's economy, and do we think we're getting the results that we want? And by and large, in a world where this isn't a world of precision,
watch Amazon here. This could be a nice
gradually cooling
possibility
economy,
for a
gradually cooling
long
labor market, progress on inflation, 4% unemployment, 2% growth. We're getting kind of what we would want
watch
to have.
Amazon.
And so that's, I worry that some people, no one in this room, but some people think that the R-star debate is the thing that dictates our assessment of how restrictive policy is. It's really not. Unless you think that the long run rate is the same as today's rate.
I think that investors are trying to figure out, though, where you're going to end up and what the policy path looks like once you start cutting rates. And it becomes important.
And the SPY has just stopped.
No, I agree. It does. Yeah. It's what will we discover to be? We'll find it empirically. What will we discover it to be?
This week is,
and I think
as far as
there's a debate going on. There are people who feel very strongly that it
through.
hasn't changed and that it has changed, and ultimately it's unknowable. It does matter for the longer run. It matters for where rates will settle out, but it doesn't matter much for policy decisions today, which are the ones we're actually making.
Watch Google at 184.50
10
for a
10
possible
cuts
rejection
coming or 15
or
cuts.
a minor bounce
do you
off
think,
it, like
President
what
Campos,
the
it's
camera
changed
isn't working.
post-COVID? Are you dealing with a different economy?
So the R-star story for emerging market countries is a little bit different. So for example, if you had a table of countries of Latin America, you would find that at least the models internally used by their own central banks, in some cases you had R-star going higher, like Brazil, from 3 to 4.5. But in some cases, you actually had R-star going lower. So the question is, what is the short-term view and what is the long-term view,
so low
as
down
Chairman
with all that
Jay
open damn
described.
space?
And I think for us, it's more like trying to understand what is the structural reason for the neutral rate in Brazil to be so high, 4.5% real time, is really high. And I think a lot of it has a lot of structural elements from the past, but it has intensified during the pandemic. And you could go and talk about the amount of subsidized credit. You can talk about the trajectory of the debt. You can talk about productivity. For example,
guys,
when you look at productivity, there is one thing that not a lot of people talk about,
ground
which is
higher.
in the need for raising money, sometimes the adjustment is done on the revenue side. When you do the adjustment on the revenue side, if you look at what's being done in emerging market countries and even in some advanced economies, you tend to go back and tax capital more than labor, because it's very hard to tax labor coming out of a pandemic. If you tax more capital than labor, and this has already been happening for a while now globally, and especially in emerging market, then you introduce another element that will bring productivity lower. So when you look at the causes of the of the neutral rate to be so high structurally, that's, I think, what we need to work on. And Brazil has done a lot of reforms.
When you go back up and test prior days close or what?
And I think if you compare to other EM countries, Brazil was actually able to do reforms in the middle of the pandemic. We did the social security reform, we are doing a tax reform, we did the labor reform, all in the middle of the pandemic. But still, when you look at the efficiency of what was done, the end result seems to be that our structural rate is still our neutral rate, our star is still too high. And I think we need to go on and talk about what are the reforms that are needed in the medium term to make sure that we have a structural rate, a neutral rate that is lower than we have right now.
President Lagarde, do you ever see a world where we get back to near zero interest rates absent a crisis?
Do I think we're heading towards that?
9.5% now.
Look, 111?
My view at this point in time,
bid-ass makes
very
no
unlikely,
sense, bro.
but it's
that's why
not
I
something
didn't make
that I would want
money
to
on
pass
there.
judgment on. What I can tell you is that when we
as much
start
as I
having
thought I
that
should have.
conversation that Chair Powell
105,
described
106,
perfectly
8.
well and that I would completely subscribe to, I would be relieved, because it would mean that we are getting closer to where we need to be. It would mean that we do not have any shock suffered by the economy, nor on the immediate horizon. So that would be good news. But we are certainly not at this stage, and this is not the work that we do when we set our policies going forward.
One thing that's been moving fast and has the potential to impact economies is generative AI. And I know we started talking about it a little bit here on stage last year. It was early.
The ask
But
should be up.
things have moved, President Lagarde. So how are you thinking about any impact on growth or productivity or inflation of what's happening in technology?
Well, Sarah, that's a subject for which we need another hour, because there's so many questions about it. Number one, there has to be some regulatory framework within which AI and generative AI in particular, especially if it's in the hands of a small oligopoly of companies, is actually organized in order to protect a number of rights and protection of citizens. I would start from that, which is not where we are for the moment, although there are attempts to organize in a better way, as was the case with internet, on a global basis, the use of generative AI. So point number one. Point number two, and I will let Roberto talk to that point because he's more of an expert than I am, the question of how much energy is used in order to test large language models is really something that is not often in discussion, and yet it matters enormously. Third, the impact that AI will have on growth, on inflation, on productivity, I think is yet to be determined. I think most people would agree that it will have an impact throughout the ladder of jobs in most segments of the economy, in areas where mechanical developments have not historically affected jobs in particular.
NVDA.
And it will require significant amount of training and constant upskilling of people so that they can adjust to artificial intelligence, use it, and not be victims of it. I would add to that I think we at the ECB are using artificial intelligence, try to do it in a safe environment without being hostage to those companies that would like to have access to the most private of our data. So it does require a cautious management and enough control without preventing the innovation and the creativity that people can apply in the use of these tools.
You use it in models? How do you use it?
We use it in models. We use it in, whenever we need a lot of language mining and whether it's structured or unstructured data for that matter, we use it and we are constantly pushing the frontiers of that. But as I said, cautiously, because we need to protect data,
guys,
and we need to make sure that there is enough human judgment involved in the process of this use of artificial intelligence so that we are not either hostage to the mechanic itself.
It is a mean tail through there.
Do you think that fears over generative AI, Chair Powell, rendering certain jobs or industries absolute, are legit? And is there anything a central bank can do?
I don't think we know. So you see this massive investment boom. You see, serious people in the private sector and the public sector there's a sense of
I will
something
say this real
big coming
quick.
here.
If
And
you break
it feels
one,
like what
if
that
you
will be
break
is it
this
will
level
eliminate
here,
some jobs, it will create
you're
some new
going
jobs.
to be
And
in a
the question
channel
really is
now where you
for
would
many
look
people
for
who
a break of
will it augment their
121
labor and make
and
them more
look for
productive,
that,
or will it
you know,
eliminate their jobs?
119.
And I just don't think we. I don't
You
think
have
we
to
know
break
that.
this level though.
It's
Right
too
now
early
it's
to
support.
say. There's not a lot a central bank can do about that. You know, this is really a job for. We can supervise our financial institutions and things like that to make sure that that they understand what they're doing with all different kinds of technology, but also like everybody else, we're meeting with all the experts and asking ourselves what will be the effects on productivity, on inflation, on growth, and will it be enormously displacing, and if so, of whom? One thought is that it'll be more people doing white-collar jobs who are writing press releases and things like that. So we just don't know. It's something we're investing a lot of time and effort. We're not using generative AI. We're very carefully looking at that. Other earlier forms of AI are in fairly common use in American business, and I believe we use some of that.
What about you, President Campos? I know you're focused on the energy needs as well.
Well, first, I think when you look at the surveys that we have, and we have plenty now on the use of AI on companies, what you have in terms of empirical evidence up to date is that the companies that use AI to enhance existing labor have had better results than companies that have replaced labor for AI. So that's something that we know. It doesn't mean that some jobs won't be replaced by others, as it was said. But I think what we need to understand is what we are seeing basically is an increase in the ability of processing data and storing data. So it's basically computer power and the ability to store data. And that's very energy consuming. You have a couple of dimensions that you need to look in. You look to privacy, where is the limit, and what is the taxonomy of using this once it becomes a global
talking
instrument?
In the mic. Watch the
what
cues,
is the taxonomy
guys.
of using this? Because you could be talking about
when the mic's
data
off.
centers being placed in countries
Watch the
that have cheap energy to produce services
level.
for countries that have more expensive energy. So once you start crossing the frontiers, thinking about how you're going to do this movement globally, I think there's a lot of consequences, and one of which I think is you're going to have very unequal growth between the countries that are more on the edge of producing this technology and the countries that are not, and the energy consumption also will be very unequal. So I think globally we need to look at how we're going to connect the dots and create more or less a taxonomy for this development to be sustainable.
That's a mean rejection.
In the minutes that we have left, want to do sort of a quick lightning round of questions. Mainly, we talked about opportunities, we talked about NVIDIA, about economies. What about the biggest risk facing your economies? And I do wonder if they're the same or different. Chair Powell, what's the biggest risk facing the U.S. economy right now?
Yeah, I mean, I traditionally have said cyber risk to that because it's, we know how to deal with credit risk. We know how to deal with lots of kinds of risk, market dysfunction, things like that. But we haven't really had a big successful cyber attack on a financial market utility or a bank. And that's the kind of thing which I think is, the stuff of lying awake at night. I would also, today though, honestly, really it is just the balance that we talked about, getting the balance on monetary policy right during this critical period. That's really what I think about in the wee hours.
President Lagarde?
Same thing.
Volume to the buy here.
Really? Cyber risk?
I think, I'm saying that touching wood, actually, and I wish, because it's one, if you ask,
that's a shame, guys.
If you ask
Look
the financial sector, if you ask banks with which we interact a lot, sometimes much to their chagrin, but eventually to their satisfaction in the long run, I'm sure, because we supervise them carefully. But typically, that's a risk that they flag as one of their top priority risk, and on which I think we need to constantly improve the level of coordination, first, second, third line of defense, and best way to respond to those. Now, clearly, I'm concerned as a person more than as president of the ECB about the backlash that there is against the fight against climate change, and some would argue that it has nothing to do with central banking, but I would contend that this is actually not the case. It does have a ramification
still
impact
heavy to the
that
sell
we should be
side,
mindful
guys.
about. But
Still
it's
really
a risk
heavy.
that is
Those
there,
orders are
and
heavy,
that,
or at least
that will come to
heavier.
haunt us if we don't do much about it.
I thought you were going to say
The fills,
geopolitical
at
risk.
least in time.
That's there too, right? Facing Europe?
I don't like
Geopolitical risks as
level
defined
2 and
by
stuff.
Maurizio earlier on. No, who was it?
Yeah, Moritz.
We heard a lot about geopolitical
Get
risk.
a pop here. Let's go.
It's there, and it's just on the doorstep of
5, they just
Europe.
tried to fill
When
me
you look
at.
at this horrible war against Ukraine, it's a major risk which is out there and which is hurting those on the ground and
I
the
just
neighboring
missed
countries
that.
in particular.
What's your biggest risk?
If you look at what markets price today, they will probably, at least for part of
AI
yen,
keeps
especially for
Powell
Brazil,
awake at
part,
night.
the conclusion
funny.
would clearly be that the main risk is fiscal. But I think that comes and goes, and it has
Alright,
to do
let's
with
go
growth
SPY.
and
So
productivity.
SPY's at
and a lot
high
of the
day.
things. I think there is one other risk that I see, and
110.
it's not very tangible, which is the polarization
Another
that we live
rejection
today.
there, getting
If we think
getting
about the
spicy
amount
here.
of time that we
It's 10
spend
o'clock,
on
10:30.
some social issues that are connected
And
to
not
polarization,
long.
and that are not that meaningful to produce well-being of the society, I worry a lot about that.
Yeah. So if we're sitting here on stage in 1 year from now, which we hopefully are, the inflation rate in the
I would
U.S.
like
will
121,
be.
guys. I got to be honest. I want 121.
You know, mid to low twos.
That's kind of, we're mid twos now.
Yeah. Well, we have 1 month at 2.6, and you know we had a brief visit to the low twos at the end of. But I mean, sustainably, durably underlying
Okay,
inflation
so it's turning this
between
into
2 and 2.5 is what I would say. That would be a great
Turning that
outcome.
into
but-
Headline
resistance
PCE.
now.
Yeah.
We went up and tested yesterday's
President Lagarde, 1 year
VWAP.
from now?
1 year from now, I would say low twos. We are at 2.5 latest reading, and as I said, bumpy on the
gotta
way
be able
ahead,
to break
but
through that
yeah,
level,
low
though.
twos.
You've
Look
been
at the
closer to
rejection
4%
here off of
President Trump's rate lately. So where do you
121.75.
think you are in a year from now?
SPY at high
Well,
a
I
day.
won't be in the central bank
Well,
a year
right.
from now.
We already established that, yeah.
But I think that
Let's see if it
the-
falls here,
the-
guys.
The
See
work
if it
that's being
falls.
done
See
is
if
very
NVIDIA
technical.
falls to a new low.
I'm confident that we'll continue to be that way, and I think when you look at expected inflation today, I think it has a disconnect with the current inflation, and it has a disconnect with the fundamentals that we
That's
have
that
in Brazil.
rich laugh.
So I'm
Or not
confident
rich laugh,
that
that's that power laugh.
the future inflation will be
Y'all
lower
felt that?
than the expected
power
inflation.
laugh?
In other words, I think what the market's pricing today is not in sync with the reality.
What about the unemployment rate? We're going to go full dot plot here.
Yeah. You know, I'd be happy if it were just right where it is now. That would be a good outcome. Plus or minus a couple of tenths would be good.
Is that likely?
Yeah, I think it's reasonable.
Starting to rise.
It's moved up from 3.4. We touched 3.4, so we're up to 4. But
All right,
4 is still a
so-
very low level. You know, it's been a long time since.
Man, that
if you
should
take,
be-
the last time we were at 4
I'm just
or
waiting
below
to
for
get
this long is,
confirmation
you know,
here
I was a
if we can
teenager.
try to make a new high or not.
Also, unemployment
We
rate
do
in Europe.
have
it's been,
resistance at
what,
546
healthy,
on the
6.5%.
spot.
Historical low,
Yeah.
and I hope it stays there a year from now.
Yep, and NVIDIA's
What's the
pulling
unemployment
back.
rate in Brazil?
Well, it's close to 7% now, which is very low when you look at our history. I think probably we'll go up a little bit, but not too much. But I think what we need to look at is the participation rate. So we just published a study that shows that the transfer programs have an impact in the participation rate. Our participation rate was down and then it's recovering a little bit at the margin. And I think it would be very important to understand what is the dynamics of the participation rate going further.
Look,
And finally, Chair Powell, were you,
98, 99. We could get this.
Were you
We could get these calls,
a
man,
two-cut dot
pretty cheap.
or a one-cut dot for 2024?
No comment.
Thank you very much, all of you,
Thank
for
you.
participating. I tried.
So thank you there for such a wide-ranging and fast-paced discussion. And
Again,
we
I'm
even
looking at the
managed quite a
124s.
few jokes, even without Governor Ueda here this year. So So well done, guys. You really helped end
for
the
the SPY
first
to
day
get
of
back up into
Sintra on a high.
546.
All that's left to say now is please join us all downstairs where we'll be taking the group photo.
546 on the SPY. Let's go. Come on, let's go, NVIDIA. Let's go, man. You're holding long enough here. You're either going to fall or you're going to pop. Let's go. Boom! I want to see something like this. Boom! Rip and dip. Fuck. They just don't want to buy this thing, man. Whoa, 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 whoa. Was that a $25,000 or 25,000 shares? 4,000? I know it was a big one. I know it was 3,000. They're buying down here. Let's do it. Those are the big orders that we need to worry about. I should be buying right now, guys. I need to buy. I need to buy. Can we get one more little pop down into there? Into that. So I am looking at the 124 calls again. Come on. Come on. Is that a rejection there?
TSLA Tesla new highs now 231.08.
Fucking God, I should have just went long Tesla. I told you guys once it got into that gap that you could get 127, 128. I'm such an idiot, bro. I'm such a fucking idiot. I swear. Every day I wake up, I regret not waking up. Or every day I wake up, I regret it. Every day. Easy trade on NVIDIA yesterday. And just Tesla, that's where I should have been concentrating. We said we were in the gap. And it was just an easy money trade for Tesla. I'm going to go to Tesla and then NVIDIA is going to pop. Look at this. Here's your gap. And we said we get inside that gap and close. Look to go test the top end of the range. We would have been out of this at 227.50. Especially with this type of volume there. Again, you'd have to look at the one. Okay, so the 1 minute's telling you buyers are still in control. Continue to ride it. This is a demand type of day. You should look for a pullback. It should come. But that was the easy money trade that I fucking watching NVIDIA. And it doesn't have volume. Like, I don't, it doesn't make any sense. It does not make any sense. I wonder how many people I made mad with that freaking buy trigger post on Twitter. What happened to all them buy triggers y'all was talking about yesterday? Boom. Let's go. Alright, I just took that, guys. I don't like it. Here it goes. It's going to reject and go lower.
MBIO shares moving again up 27% now. Michael Bravo, India, Oscar, 62 cents.
Alright, so I am long there. I got filled at... I told you guys I'm sitting on the... So I paid $1 for that. Come on, get up above there. Get up above there again. Let's go. Pop. Let's go. So weak, guys. It's so weak. This is where you need to buy down there. It's going to sell off. So we are down 2%. Yeah, I'd rather wait. That sucks. It's all good. It's all good. We got to get above there. We got to get above 121.50, and you're seeing that you're struggling to do that. There we go. There we go. Let's go. Bang. Let's go, guys. Let's go. Take a little off the table there. No! No! Oh my god, bro. You fucking dickhead motherfuckers, man. So, listen, what is going on here?
And Jay Powell wanted to reiterate that they're in wait-and-see mode. They want more confidence on
Dude, NVIDIA is so screwed up right now. Or I have the shit screwed up. I don't know.
I think there were some things we can talk about here, though, about some of the comments, and you guys have already brought some up.
What is going on? Hold up. Dude, that was... Did anybody get long? Good job if you did. Good job. Take your profits on the extension. I'm going to hold this for a little bit. The fill there, I got totally dicked on the fill. I got totally dicked on the fill, and I didn't even want to get filled. Uh-oh. Take your profits, guys. At least you got to hold 121.50. Do not let yourself start closing down at low a day again and not take some off there. I swear to fucking God, bro. Fucking piece of shit. Bro, this has been an awful day for me. I have been too right for this. Like 93. So, listen, something's going on with the options chain.
We actually have a segment from earlier with Powell addressing staying out of politics. Let's take a listen.
We've been given this great responsibility and great powers. Really important that we get it right. And we've been told to stay out of politics and just do your job. Do your job. And that's what we do. But we don't try to get involved in issues that are not our issues. And in particular, we're just focused on our goals and getting through that. And if we do that and do it well, I will say in the United States,
Okay, so bid down, ask up.
For an independent Fed in both political parties on both sides of Capitol Hill and everywhere. I don't think that that's really in question. As long as we just are seen to be doing
Down
our
up.
job.
No.
Task at all times.
No.
Jim, how far do you think he'll take that? Will he not want to even show a suggestion that they're getting political and thus wait until...
You gotta get this pop. Look at that bull flag right there. That'd be a nice entry, guys. Your stop loss is really tight right there. You know, you're bumping into VWAP though. You should have already been long down at 99 cents to $1. But
And I don't think anybody in the political world would worry about that. So I think, you know, if you look at the history, the Fed has been willing to move during election cycles. So I think that's a definite possibility. But, you know, to get to a September move, they're going to have to see, you know, continued good data on inflation so that they can be confident to make that first move. You know, I think just the notion that somebody's going to win an election because the Fed did something in September, I don't think that's how American politics works. I don't think that's what the median voter is. They're thinking about a whole host of much broader issues than
all right, guys. So really nicely done there, y'all. Nicely done. Let's go. Let's go look for that. I've already spent way too much money today to be doing anything. I might have to trade the SPY or something. Let's take some off there in front of VWAP. Half of that trade is off right there. Let's go. Half of that trade is off. Oh my God, this is going to be a big one. I might just take this thing off here. I might just take it off here because this is your level. And if we just consolidate, it's going until 11 o'clock. I'm just going to take this off, guys. I am Audi 5,000 of that trade. Listen, the goal here, too, would be to hold and see if you can continue. If the SPY and Qs can continue to rally, I would want you guys to look for, if you can close 122 and hold it, look for a run back up to prior day's high. That's a nice move. That's a really nice move. Okay, look for a move way back up there. Of course, take profits in front of these levels.
But it's about the same as it was pre-pandemic. So still a good jobs market. That means that the committee doesn't have to worry too much about that side of the
Watch out.
mandate. They can worry mostly about the inflation side. But I would just
So 2 for 2 today so far. I really got screwed on that first take profit. Watch for the sell side volume here. Tape is speeding up big time.
and we haven't found it. You know, if you thought the policy rate was right when inflation, core PC
And the SPY pulled back. Be careful, guys. SPY has pulled back, which is okay. You still want to be able to hold, you know, 544 or 555, 545.
Seems to me like the Fed needs an opportunity here to get going on its easing program.
You got to be able to break yesterday's high day. Let's go, NVIDIA. Did anybody else get that long? Let's go. Let's go. Bang, let's go. Come on, y'all. What it do? If y'all are not taking some pieces off here, all right? If y'all are not taking pieces off here, you might want to find a different trade. Let's go. We're looking for that high day. This trade here is good. This could very well, if we can just hold up here. We start holding 122, guys. We're gonna look for that. We're gonna look for this move throughout the rest of the day. So it's not gonna be this easy. All right, and something can always happen. There are a couple wars going on, but look to try to get back to yesterday's high, fill that gap from yesterday. Beautiful, beautiful, beautiful trade here. Beautiful entry. Beautiful entry. So, whoa, what happened here? What happened there? Alright, so you guys see why I did this and why this type of trade makes sense? Do you see why? I forgot about ARM. But watch ARM up there too. You could have some resistance. You might be able to play both sides of this trade. Microsoft's still just climbing. She's just by herself. Nobody talking about her. Making new highs. This move from here to potentially there, and what I can make from this move is going to, it to me is worth the what I'm going to lose with that. You guys see what I'm saying? So when you go looking at your trades, try to come from a mindset of, bro, I'm okay with losing, you know, I don't know, let's just say 10, 15 bucks a contract, right? That's what you probably would have lost here, right? At most, though, at most, if you bought correctly. We bought that down move and used level 2 to help say, hey, there's been a shift. There's been a fundamental shift that you don't see underneath. Yeah, you can see it bounce off of that area, but you don't know into which, you don't know unless you are looking to see, oh shit, hey, there's a 34,000 buy side order that just got filled. 4,000, 5,000, like that amount really helps you in saying, okay, I think I'm going to join those people. I'm going to join them. So when people say that they don't use time and sales or level 2, they're doing themselves a disservice until they start using it, which helps with the confidence to take the trade. That was a really nice trade. It netted you over 20%. Yes, it's in a downtrend, but take your profits. Man, let's see. What's the SPY going to do here? I'm curious. I don't know.
Good question. I suspect there's room for 2 rate cuts.
We have some resistance here at 546, guys. So make sure you're aware of it.
And we're not hit with another spike in rates, which is a risk. Then I think there's room for 2 rate cuts. But I do think that we've got to recognize that
Let's go in video.
elements of inflationary pressures, as we know, particularly in the services sector, certain segments of the labor market.
Yeah, Qs are going higher. Qs are going higher. They're above that level. 546. With me, you'll have to forgive me. I'm hungry. Which means if the Q's got above here, right? The Q's got above there, held it, and are climbing higher. Well, hell, that's telling me that we should have no problem with the SPY going back to 547. All right. So, with that said, let's have a look. What'd I tell you? Huh? Please don't fuck with me. I'm telling you, motherfuckers, right now. We can do this all day. All day. Start taking that off if you're not comfortable. Alright, if you're not comfortable. If you don't think it'll hold and you're seeing the overall markets go higher and Nvidia's down, yeah, don't be long that stock. Alright, don't be long. Move on to it. I'm going to give it a little bit of room here. Back to break even, because I've already got half of that trade off. Nice 20%. Come on.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all work benefit to Coventry for cash, even a term policy. Even a term policy? Even a term!
I mean, it is true that if the overall markets are going to go higher and the semiconductors are not going to participate, then I got to go too. I'm in full agreement. I fully agree with you there.
Sleep is never a one-size-fits-all at Avocado. And because your health and our planet is what matters most to us, Avocado's certified organic natural.
There's not much. Energy is doing really well.
Discover why Avocado is one of the highest rated.
Oil and gas.
Visit our stores or your local retailer or shop online at Avocado.
Man, this looks nerve-wracking, honestly. Yeah. Let me, Alright, there goes NVIDIA. We're out. I am out of NVIDIA. That's it. But it didn't hold. I'm going to say it hold and climb. But it didn't. This is why I said yesterday that you're seeing so much chop. It's killing premium. All right, so now we're going to be able to buy around the same area at a lower price. So I'm with it. I'm for that. That's so funny. Look at that.
CCLD, Care Cloud getting up off to the high.
Buck.
Charlie Lima Delta.
Look at the Q's just ripping. I wonder if I wish they had the NASDAQ up here. Bitcoin's down. It's so weird. Let me see. Hold on. So, it's hard because, like... Damn it. I'm going to throw on some Charles Schwab here.
GME GameStop at the intraday high now, up about...
Oh, looks like we're going to be trading some GameStop. Never mind, I won't be trading the indexes. Hold on. I'm getting there. I'm getting there. I just need some shit in my mouth because I'm hungry. Yeah, I purposely said it like that. Alright, let's do this. Alright, GME. Keep an eye on Bitcoin because it looks like Coinbase is really getting a nice consistent pop there. I'm not sure if you can trust it or not. Let's look really quickly. BTC, USD, BTC, USD. Every time I type that in, I can't help but think that. I don't know, guys. I gotta be honest. I still think, you know what? You know what? That might be it. That could be it. That could be it right there. That's a nice pullback. Watch, just pay attention to the volume that comes in right there. Damn, look at that sell side volume. But yeah, so let's see here. Come on, let's go, buyers. Let's go. Bro, Abby is just doing way too much today. She just runs in and out, and she just sits there and yells at me, like meows, and be like so loud. I'm like, bro, you're killing me, girl. What were we looking at? GameStop. All right, GameStop. Bang. Let's do it. Let's go to the charts. Let's do it. We're looking for 24, so we know 24 is that level. We know 24 is that dude. Shit. All right. All right, we have some room here. Watch 24. If we can break through 24, look for that close up there at 24.67. 24.65. I do not want to edit the properties. You want to edit these properties, bro? Nope, I'm good. Thank you. I'd rather not. All right, watch prior day's high up here. And watch that volume. Oh my God. It's going, look. You see that volume? Nah, you don't because it's hidden. You see why I get so upset every day? These charts and everything. I gotta really change it. Okay, so here's the number one thing. On these pops, what do you not have? There's something that you're missing here with this bounce and this extension higher. Let me know in the chat if you understand what it is. All right, let me know. If you guys figure that answer out, let me know. What is it? It's $1 million question right here because you could be already starting to make you some money. $1 million question. What is it that is missing? from keeping this chart bullish? I think that was the question. So this would be the area, would be your stop loss. 23.75 short, 23.74 short, with the stop loss right there above 24, or going into 24. All right.
Well, you know the rules of the FOMC. I'm not allowed to speak for anybody else. I'm not going to try to get in the head of Chair Powell. I found myself very much in agreement with his sentiment that if you look over the last year, we got inflation coming well down.
Does anybody know? What is it that GameStop is missing to keep it from going higher?
It's Goolsby said, I think we should do it by choice, not default. As inflation comes down, policy gets more tight than on CNBC.
Oh my gosh, they have a ton of members on today. Did anybody get into that SPY position? I mean, you're right there in the resistance. Just keep the cues on your watch, on your radar. You know, I would just use the cues as your leader. Let's go check and make sure that the cat did not post on Twitter. Let's make sure the cat didn't post on Twitter. Let's not forget about NVIDIA either, guys. I would like to have that reversal because that's going to be a setup that could pay us. Oh my gosh.
We got to keep getting inflation readings like what we've been seeing recently. But if we do, if you take a step back, the art of inflation is clearly down.
Make sure you're taking profits on those calls. Watch out. You might get some downside. The buying just left. I'm out. I'm out. I'll take it. 20%, 10%, 20%. I need us to crack above now. Like, I need us to start breaking out. I'm just curious what happens right here with this volume. Okay, so that is a 3-minute. Fuck, I should have had the 1 minute up there, guys.
Goolsby said if we're using the measures on
See what I'm saying? Yeah, that's...
in Europe, we would be at 2% already.
Fred? The savior! Sorry, I just don't want to chew in front of the mic or into the mic and But
The arc of inflation is clearly down.
the savior himself, right here. Huh. The Qs are practically straight up.
Goolsby said continued progress on inflation would give me more confidence.
But the fiscal impact is in focus. Bond markets paying attention.
Goolsby said first-order impact of immigration is on population means higher steady state monthly job gains.
100 degrees or whatever, like it is here. But our motto is there is no bad weather, there's only bad clothing. And in a way, that is
All right.
just be prepared. You get the conditions and you react to the conditions. And that's what I think the Fed has to do with fiscal. We're not in the fiscal business. We're not in the election business. What happens in the fiscal side affects inflation, affects unemployment, and therefore we do have to think about it, but we think about it indirectly. I don't think it's our role to be weighing in at a moment like this.
But given this outlook, how do you see the policy path evolving? Whether you cut
Watch Meta. Look at Meta testing yesterday's low.
adjustment period look like? Where do you want to go?
Well, you asked Chair Powell something.
That's a nice level there. Watch that 504 level.
What's the end point? And he seemed to respond in a way that
See, I'm going to have to pull up
which is we don't decide
this.
the FOMC decides meeting by meeting. We look at the data. I don't like tying our hands for the next meeting, much less.
Oh my God. So the 20 day is no longer there.
It completely depends on how inflation goes.
This is why this shit is such a fucking pain in the ass, bro.
What about the divergence?
It really is.
On the stage, it was interesting that all the central bankers are moving at different speeds when it comes to
AMWL.
tight monetary policy. The fact that Europe and Canada, for instance, have already started cutting rates and the U.S. has not. Does that impact the
Who cares? You should have. Why weren't you so worried about Brazil and everybody else when they started cutting, and all the other countries that started cutting? Like, you never said, "Oh, we should be starting soon then too." Who cares? I don't know.
Surprised that in the short run they might have different trajectories. Overall, I think
They also have different.
pretty significant
Like, there's also.
inflation went
I'm not sure if some of you guys know this. Some of you guys might. But the way that they run a central bank, they don't. Some of these countries don't even have central banks. They have like completely, totally different systems than we do.
conditions are marching the same, and
Like to the point where it doesn't even make any sense.
it will affect the dollar, but you got to norm it. It's not just rates that affect the dollar. It's also what's the growth rate in these countries.
And you think you can get away if the Fed starts to adjust policy without causing more stress to the labor market?
For sure, that's our goal. Is that we can
He said for sure that's our goal.
without stressing the labor market.
Goolsby said the goal is to get inflation down without stressing the labor market.
And it's not that long ago that we believed 4% is full employment. It can't get any below 4%. So if we can maintain this kind of job market, which is a strong job market, while inflation comes down like what
Okay, so I am watching.
great triumph. And that's our goal. That's what we want.
I am gonna watch this level here on Meta. That's a nice reversal candle. You pulled back in with the gap down, tested that level, and now you're trying to shoot back up to like 510 or so.
Productivity growth and productivity growth been pretty strong.
But it's not really moving. If you want me to be honest, it's not really moving. Alright, let me go back. Go back to where I was.
That it would be doing its most productive work. But
Can't even see anything.
see are there diminishing returns to the improvements. That'll be key.
All right, Austin Goolsby, thank you so much for taking the time here. Talk about all the hot topics here in sunny hot Sintra, Austin.
At least ARM is above VWAP. Watch out. NVIDIA might start giving it up, guys. I gotta be honest with you. There might be a chance here that if it doesn't start to make some ground, you might be at risk of giving it up. And this is the 15-minute trade line coming in right now. So part of me wants to do it. Part of me wants to go short. Watch level 2. Watch your level 2 for a small pullback. It may not even move that much, honestly. It may not even move that much. But you could get like an extension on it. Let's see, let's see, let's see. Oh my god. I hate that I have to go up and then just to like zoom in on the volume. It's so frustrating here. Dude, there's no way I'm paying $1 for a 120. Anyway, I like to put to see if you can get, you know, not far, but like just to see if you can get like a test of that 120, 125. You know what I'm saying? You can make money. You should be able to make money there. Right there would be your entry. You broke down. Now you're retesting it right now. Boom. Take the entry right there. Let her fall back. They're trying to stop people out. Watch the cues. Well, you don't really have to watch the cues while you're doing this, but all right, that was a little bit of time there. I don't like the time that it's taking. I would like to have already had that extension happening right now. That was the point of the trade, was to get that follow through then. It's look to buy. All right, I would be out. I'd be out, guys. It's up to you, but look at that. Volume dead on arrival. Dead on arrival. Look, right there, look. Boop. And then it goes back down. Nope. See, that's what I mean. It didn't work. It's all good. It's not giving you what I'm looking for, because that was a pinpoint, you know, what they talked about yesterday on Twitter about a buy or sell trigger. No, that was a sell trigger. And once you had a few minutes go by and it didn't happen, they're like, okay, this is that move is not happening. That extension lower, and look at you see what I'm saying? Like that's why you're getting this increase in buy side volume right there, because there were people thinking exactly what I'm telling you and taking that trade. I know there was. They're like, okay, let's do it. Let's look for that nice candle. Whoop, 50 cents, 75 cents. Whatever it is, and we'll look for that pullback, and it never happened. And then now you see them all get them out. And you're still, you know, technically on a 15-minute time frame, you're still there, but the volume's falling off. So it's going to be highly unlikely that you do get like a nice continuation follow-through trade, unless you're going to get some news here in like a couple minutes. Unless they're planning on giving us some news in the next couple minutes, then I would have to say that you would look for whatever's got volume and continuation, like Tesla, like NVIDIA. I wouldn't be trading, or even semiconductors. All right, Tesla's still floating above 127. You have a gap fill at 234. 234 is your gap fill.
Another firm auto sales number today. Thank you very much. A question now weighing on a lot of investors is whether the market's momentum can continue in the second half. The S&P was up nearly 15% the first half. Our next guest sees more gains ahead, calling the U.S. equity market his highest confidence allocation. Joining us here at Post 9, Phil Camporelli, portfolio manager for multi-asset solutions at JP Morgan Asset Management. Phil, good to see you. See, Mike, so we come into the second half, you know, we obviously had this great run at the headline index level, only a 5% pullback along the way. We're at 21-time forward earnings.
I don't know what's going on here.
But what gets us the next leg higher, do you think?
Yeah, good question. And this cycle continues to kind of prove the point.
It's lunchtime. Oh no, it's 11:30. I don't know why I thought it was lunchtime. We do have a little bit of support up here, like this whole area at like 230, 232. But I would like to look at it more of like a gap. Just makes it easier. Makes life a lot easier. And let's see, does this take you right back to 234? That's wild. There's no way in hell.
In the three big things: rates, inflation, and recession. I think there's a lot more certainty on those three things versus where we were even as early as last year. And then the other piece is earnings.
All right, I gotta go run out a letter into the mailbox real quick. I'll be right back, guys. Enjoy. I'll be right back in about 10-15 minutes. Give me just a couple minutes, and I'll be right back.
45% of that return has come from multiple expansions. So there's a durability element, I think, of this rally that we continue to lean into. You said
all right, so let's move on to Ford then. You have a final thought on Aristonet, and then get to Ford, please, Dan.
Yeah, I mean, Arista, I think, you know, again, I think the benefits and the trend and the trade example for today is really a short-term example as to capture this momentum, but then also take some of the risk out of it. So it's just a straight call spread trade example in July, 17 days to expiration, and it's buying the July 363.80 call spread. Do that about $6.80 to capture further upside. And again, define your risk, though, because it is on such a tear. I do like the idea of risk definition as far as a trade example in this name.
All right. And next up, we have Ford, which 1 year down 15%, but it's been sort of sideways for a long time. Dan, what are you thinking about this one?
Yeah, well, I think that just the general trends here, I mean, GM certainly has outpaced Ford year to date. There's no question about that. But I do think that as the evolution of the auto industry continues, and just the way that Ford is set up, not only from a technical standpoint, from a fundamental standpoint, that I do think that we are going to see a move back towards those highs, I believe, in April, if I remember correctly, which is up around $14. So, you know, I think that it's still got some further upside here in the next couple of months, and I've got a trade example to try to capture the move from $13 to $14.
Yeah, it did have that little bit of a pop in April, that's true. Ben will show us the charts.
Yeah, another one that's building momentum short term here, Nicole. The longer term chart, I'm going to default to Dan on this one because it's not my cup of tea. It's a bit of a mess, simply put. But I like the idea here that Dan's looking for 13, 14 right now on some of the short term momentum we're seeing because it's present. And you can see that on the 5-minute candle chart. Just over the last few days, going back to last week, 11, 12, and the increments that we've stopped and paused. Now, coming off this 13, 12.95 high earlier today, with some energy off that level, but kind of right back into this range that we're forming around 1280. So taking a step back here, you're going to see a bit of a bearish pattern when we get into that longer term look at price activity going back to 2022. But a consolidation area, a range that's been forming again around this 13 level. And look, we're just kind of getting into that right now. So get through 13. There's some room to the upside here, still within this range, still within this bearish pattern. So something for both sides, I guess, the bulls and the bears, while we establish this sort of horizontal consolidation pattern. Again, this is extremely mature, but building momentum through 13 ultimately does open up a door for a retest of that upper extreme. I want to show you one more chart because speaking of recent and current momentum to the upside. And again, I don't want to look too much at these longer term charts here because they are kind of messy, but this one shows again that lift through the 50-day moving average, which oftentimes does build momentum. Here's that April high you guys were just referencing up into that $14 level. Take that out. You're talking levels not seen since June, July of last year. So again, momentum to the upside here. This recent run up through the 50-day moving average, it's encouraging for the bulls to say the least, even though we're still within that longer term, that wider range.
Right, understood. Final thoughts, Dan?
Yeah, I think Ben pointed out, all the aspects that I looked at as far as from a technical standpoint. And, there has been some insider buying here in the last couple of weeks as well. And they still got generating a lot of cash. They got good cash flow. So the stock is fundamentally sound. So I think that, looking at just the general trends coming off these levels, and it does appear to me now if it breaks through 13, that it'll make a run to 14. So I'm looking at a trade example here where it's August call spread, buying the 13 call, selling 2 of the 14 calls. So I'm not looking for a complete runaway. But again, that just lowers the break-even point on this. You can do that for about 13 cents. And again, you get the capture. I think, if we continue to see this momentum higher and we continue to see GM and just the auto industry or that sector continue to gain traction, no pun intended, but at the same time, I think we could see it go up to 14 here in the next 45 days and then be able to capture a big chunk of that move higher.
All right. Dan Deming, great to see you. Have a safe
Thanks,
4th,
Nicole.
KKM Financial. Ben Lichtenstein on the charts there. Thank you both for being here for the Big Three today. Coming up next, we're going to spotlight all things about the Federal Reserve. Of course, Jay Powell has been speaking today. We're hearing more about some of his thoughts pertaining to inflation coming at least in the right direction. Andrew Brenner is standing by, and he's going to break it all down for us. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.